most out of TuneIn.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Which we're increasingly working to get against the growth dynamics. And of course, when you're talking about European growth, in particular in Germany, then you're also talking about the headwinds from the manufacturing side, which of course, whilst easing, are still going to be relatively elevated on an ongoing basis. And so that's why I think there will need to be some degree of fiscal recourse in terms of Germany to try and alleviate some of those macro headwinds. And I think it is going to be fascinating that as we move towards increasing sort of impetus towards greener orientated growth trajectories, that I think we are going to see some degree of fiscal targeting in that regard as a way of offsetting some of the macro headwinds that are still evident.
Well, that sets us up nicely here. Jeremy Stretch, thank you so much for extending the conversation this morning with CIBC World Markets. John, I want to go right there, and you know this better than me or Lisa. There's a green theory in Europe. Can you have a green theory on the precipice of recession?
Here's the green theory in Europe right now, that if you have some kind of green climate-led focused investment in Europe, you can do that and issue green bonds. Who's going to buy them? The ECB. That's just one of the ideas out there at the moment.
Are you serious?
Can match fiscal
like the
with monetary policy. I'm not saying that's going to happen. I've not heard it from any of the officials. That is just a big speculation right now as to what could happen. I emphasize could on the continent in the coming years.
Well, and there has been a serious discussion within Germany as well about possibly doing something similar, not maybe with green bonds and having the ECB buy it, but financing some sort of green infrastructure push. But the question is there any political clout that can get that through right now? And that seems like that's impossible.
Yeah, I don't know. And I don't know if President Lagarde can wave a magic wand and suddenly get the European fiscal impulse up just by talking to them. I'm not sure how that's going to work.
But this is important. The chart that Jeremy Stretch has is so good about UK growth just fading. Brexit and all that. And John, you didn't ring up a big bar bill the last time you were in London. I did. I tried to support the economy. You failed. But, there's Germany with a shock today of what they're doing as well. There's a point where this has tangible effect in policy adjust. Is that the surprise for 2020?
The surprise for me from the Bank of England is their shifting assessment of the UK economy. We've gone from saying that we're at the speed limit and we might need to hike interest rates to saying that we have some slack and we might need to cut. I'm not sure where that shift has come from, but ultimately it's not about whether I think they should or shouldn't move. It's about whether they will or won't. And right now you have 9 members on the MPC. You need 5 to put their hand up. 2 are already voting for a rate cut. In the last week alone, we've heard from Carney, Tenreyo and Vliga also pushing the idea that the debate is about to happen month end.
They all play backfield for AC Milan?
They play for Liverpool.
Okay, very good. We'll come back. Let me do a data check. Futures -2, Dow futures at -31. This is Bloomberg. Good morning.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. Public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE SIPC.
This is a Bloomberg Money Minute. Investors are assessing the latest earnings from banks. Bank of America beat estimates in the latest quarter, giving the shares a lift before the opening bell. But Goldman Sachs missed, marred by a $1 billion legal charge tied to the 1MBD embezzlement scandal in Malaysia. President Donald Trump is poised to sign a Phase 1 trade deal with China today. The pact leaves punitive tariffs in place on almost two-thirds of U.S. imports from China until at least November's election. Target today trimmed its expectations for fourth quarter sales, citing a weak holiday period. Company noted softer than expected performance in key holiday categories, including electronics, toys, and some home goods. Stock futures this morning are narrowly mixed. S&P futures down a point, NASDAQ futures up 9, Dow futures down 23. NYMEX crude at $58.20 a barrel. Gina Cervetti, Bloomberg Radio.
What if you could keep the top economic experts in a conference room next to your office without having to feed them?
Do we need better optics? Do we need some substance? Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now there are more ways to hear us. Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and at BloombergRadio.com. Bloomberg, the world is listening. Deep understanding in record time.
$2 billion, not exactly what they were going for.
They're going to be profitable.
Bloomberg Business Week, weekday afternoons at 2 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio, 1 hour away from the opening bell. Equity futures down just 2 points on the S&P 500, negative not even 0.1%. The focus on the earnings, also on the data. Your economic indicators will be brought to you through the week by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth the number one in independent advisor satisfaction among financial investment firms. Visit commonwealth.com to learn more. Let's cross over to Bloomberg's Vinny Dowd-Giudice, shall we, and get you up to speed on that economic data.
Yes, good morning from our friends at the Labor Department. The producer price index, a tame reading, up 0.1% in December. The core rate up 0.1%. Year over year, the core rate up 1.1%. That's the smallest increase since 2016. So again, some more tame numbers on inflation from the Labor Department. The PPI up 0.1%. Also from the Labor Department, Bloomberg News reporting the government may alter the manner in which it transmits major economic data, like today's inflation report, to you, the public. It could threaten the orderly dissemination of critical economic indicators. We're talking about log jams, in addition to what you often experience at this hour on the George Washington Bridge, Route 80 in Patterson, New Jersey, and America's other highways and byways.
Important. This is very important.
It's not funny. It is. But I mean, we're talking log jams.
Vinny,
well, I'm glad you bring it up.
Thank you.
Vinny, I'm glad you bring it up. And folks, we'll talk about this in the coming
weeks.
Well,
you know how this works. Typically,
really
Tom,
important
you go into the lockup, they give you the data, you keep it to yourself, then when the data's due out, you release it.
Yeah.
Right.
That is a very, very efficient way of making this happen.
It really works.
Everyone gets it all at the same time. Are you telling me there's going to be a rush to get to the website on payrolls Friday?
It's got to be basically dead on arrival. It's done. Folks, it's not fancy. It's a really dumpy room that I was in, and it's like seriously hermetically sealed. Hermetically sealed doors.
We are going to be talking about this potential policy change coming up. I do think it's really telling that we have yet another consecutive disappointment in inflation data coming in the United States. And this is something that's it's a little light again. This comes after the little light CPI. Are we starting to see a trend, though, where people are overestimating already sluggish inflation? And what does this say? I mean, John, to your point about the rate cut debate heating up, I mean, this basically edifies the calls for it. I mean, to some degree, at least the Fed certainly is on hold.
Well, let's bring someone in on this, and we're very fortunate to have her. Megan Green is at the Harvard Kennedy School. We really thought she would cancel this morning because she is on the short list to replace Mr. Cora with the Boston Red Sox. She's been sitting by the phone, I know, all morning waiting for the call. Mr. Cora out at the Red Sox on the same idea as the Houston Astros and stealing of signs. Megan Green, give us the signs of the Fed right now. Lisa Abramowitz mentions a little dearth of inflation. Is it enough of a signal to the Fed to change ways?
No, I don't think so. I don't think that this is enough of a mess to cause the Fed to think that inflation expectations are becoming unmoored. This is really just more of the same that we've seen throughout this recovery, where we've just had a dearth of inflation, and investors might overestimate it. They do it every time. It's still not coming in. So this is not a new trend at all, and I think that the Fed is probably going to stay on hold through this year unless we get some kind of serious mess.
So, yes, we've got the PPI slight miss. We've got the CPI yesterday, slight miss. Meanwhile, Target kind of really driving action today with their disappointment in terms of holiday sales in the November through December period. Shares down more than 7% ahead of the market open. And I'm trying to understand how much of a signal this is that the consumer is losing steam. Can we read anything into this?
No, I don't think we can read anything into, one release like that. If we started to see a series of releases and retail sales really dip, then we might start to think that the consumer was flagging. But consumer confidence has remained pretty high. And so I think so far it's too early to say that the consumer is tuckered out, because, of course, the consumer is carrying this entire recovery. So once they are tuckered out, we need to worry. I just don't think we're there yet.
And I just want to say Target, though, is not the only one. JCPenney and Kohl's previously had some disappointments as well recently, although a lot of people just shrug that off because it's JCPenney and Kohl's, and they've been sort of struggling for a while, and their business models are under attack. But Target has been very strong, and has been growing, and has been investing in their online presence. So, an increasing amount of this, at what point, I mean, if this is not enough, at what point do you start to say, wait a second, what does it say about the consumer?
Well, I think we need to see other indicators of consumer demand turn as well. So in addition to the earnings results showing it, we need to see retail sales flag. We need to see consumer confidence start to fall. And so far, those other data points aren't coming through. But, this could be the beginning of a turn. I wouldn't extrapolate too much just yet.
After AEA, and talking to Dr. Posen of the Peterson Institute, Megan Green, about what was accomplished there, people talking about theory. Are we operating going into 2020 on sound economic theory, or is it everybody making it up as they go? What do you teach at Harvard Kennedy on that?
So I'm actually doing a lot of research into this, and my conclusion is that a lot of our theory just doesn't work anymore. A lot of the frameworks that we learned in Eco 101 just don't apply, and so I thought at AEA, actually, economists were really starting to accept that. There was a really depressing consensus that we are just stuck with low growth, low inflation, and low rates for the foreseeable future. And that's a new consensus, I think, even though there's been plenty of evidence for it for years.
Well, to rip up the script on this, and folks, this is some background, and I'll be discussing this, I hope, at Davos at a really wonderful panel. Megan Green, it's really simple. The debate was negative rates and their efficacy. What did you learn about the negative rate debate if we're making it up as we go amid slow growth?
Well, so I think generally there's been a negative consensus about negative rates, and I think that's probably right, that, if you push rates down that far, you're actually punishing banks, and you don't see any kind of credit demand develop off the back of it. So negative rates aren't the answer, and particularly not in the U.S. There is kind of a consensus now that central banks can't be holding the bag for this recovery, and that's fairly new as well. So If it's not negative rates, cutting rates, maybe it's yield curve control. Japan's had some success with it. It could be more QE, though, in academia. I think there's a consensus that QE hasn't really helped a whole lot. Overall, I think, though, people are accepting that central banks aren't responsible for this next downturn for combating it, and so we're going to need to see fiscal authorities step in. And there's this overwhelming consensus among lots of economists who disagree on lots of things, particularly the causes of all this weak demand, that the one thing that would help all of the potential causes is productive public investment.
Yeah. The
problem there is just the political support for that isn't necessarily there, particularly those who are worried about blowing the budget deficit. But you don't have to blow out the budget deficit to actually boost productive public investment.
Megan, the longer that the central banks hold the bag, when do we start talking about asset bubbles again?
That's a great question. We haven't really seen asset bubbles emerge unless you argue that everything's a bubble, and maybe you could. But I think that where the bubble might be starting to crop up is in private markets, not in public markets, that we can all see. That's possible in terms of leveraged loans, CLOs, things like that. But we don't have a whole lot of transparency on that. So I think that could be frothy, but it's hard to have any real sense of how to quantify it.
Megan Green with us at the Harvard Kennedy School. And, of course, we can talk about the specifics of market economics, but we can also talk about bigger, broader themes. Megan, this morning we saw Target deliver soggy comp sales, traditional sales, and their digital sales were up 19%. What are you seeing at Harvard Kennedy about this new technology overlaying all of our business? I mean, it's something we're going to write about in 10 years or 20 years or even half a century out. But what is the effect of technology on so much of American business, including consumption? It's 70%.
Well, so I think in this example, in retail, for example, you see that technology increases transparency and price discovery, and so that pushes prices down significantly. That provides a disinflationary force in the economy. And generally, technology is doing that across the board, and so that's one of the reasons that we've seen soft inflation data and will continue to for the foreseeable future.
Megan, just to wrap things up here, I'm wondering, looking out, where do you think we are in terms of a reacceleration or a slowdown in the global economy, just for 2020?
For 2020, we're looking at a slowdown, no doubt. Every major economy has been growing above potential, and we shouldn't expect that to continue without really significant amounts of monetary or fiscal stimulus, and I just don't think that we'll see that this year. So we should expect every major economy to continue to converge with potential growth, which has been lower than what growth has been over the past couple of years.
Megan, great to catch up with you. Megan Green there, Harvard Kennedy Senior Fellow, joining us on the phone on the latest in the economic data and the next moves for central banks worldwide. Let's cross over to Michael Barr, shall we, and get you your news worldwide. Good morning to you, Michael.
Good morning, John. Good morning, Lisa. Good morning, Tom. The topic of impeachment came up during last night's debate among Democratic presidential candidates. The House votes today on sending the articles of impeachment to the Senate. Elizabeth Warren spoke during the debate aired on Bloomberg.
If we have an impeachment trial, I will be there because it is my responsibility. But understand this. What that impeachment trial is going to show, once again, to the American people, and something we should all be talking about, is the corruption of this administration. That's what lies at the heart of it. It is about Donald Trump putting Donald Trump first.
The USMCA trade deal also was a topic. Pete Buttigieg.
Yes, it has been improved. It is not perfect. But when you sit down with the people who are most impacted, they share just how much harm has been done to them by things like the trade war and just how much we can benefit American consumers and workers and farmers by making sure we have the right kind of labor and enforceability.
However, Bernie Sanders says we can do better than a Trump-led trade deal. President Donald Trump called for Apple to step up to the plate and suggested the company unlock iPhones used by the gunman behind the December 6th terrorist attack on a Florida Navy base. In a tweet, Trump said the U.S. government helps Apple on trade and other issues, so in return, the technology giant should unlock phones used by criminal elements. A lawsuit from House Democrats seeking President Trump's federal tax returns was put on hold as a judge said he's waiting for a higher court's ruling in a separate case on whether Congress can make ex-White House counsel Don McGahn testify. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barr, thank you very much, sir. Thank you very much indeed. Checking in on Apple, Michael mentioned it. Another upgrade for Apple. The price target raised to $355 from $275 at Canaccord. I've lost count of the amount of analysts that have come out in the new year, the first 2 weeks alone, and have raised their price targets on this stock.
Yeah.
And we got to see revenue. You talk about comp sales, but with a single-digit comp sales, and I look at the Bloomberg FA screen, and it's 3, 4, 5% revenue growth. What if they do double that?
Jan 28. That's when we get the
earnings. Is that the date?
That's when we get the earnings month end, and the new iPhone expected to be when it always comes out, right? September.
And the China question. I mean, I assume we'll get more information there on how Mr. Cook's doing in China.
Although anecdotal data has actually showed that they've gotten more capacity there. They've actually been increasing sales. Just to note that the shares of Goldman Sachs are now down more than 1% in pre-market trading. Bank of America down 0.75% as people parse through these numbers.
I'm glad you bring this up because the headline I saw was pretty good. I think it was off the Telegraph in London. Messy earnings. That about describes it, right?
Messy earnings, although initially when people dug under the surface, they found some things to like, including revenues that far beat expectations. We got FIC trading, etc. But I think that what you have is sort of a double-edged sword. On one hand, there's a question of the legal expenses and their strategy going forward for Goldman Sachs.
Yeah.
On the other hand, there's sort of this pessimism in markets right now, rates going lower. That's dragging all the banks, even JP Morgan lower today. So that's another aspect.
Few people believe that we actually like each other.
Yeah,
it's amazing. The people that listen to this program aren't quite sure whether you and I get on.
Including some people who are on this program aren't quite sure.
Still confused.
Still confused. We can discuss. You guys have quite
I think we need counseling.
Like a bit of a marriage.
It's 100%
we need counseling.
Yeah? Do you guys want to do that on air?
Not on the weekends. It's more expensive on the weekends.
We'll do the counseling at the piano bar in Dallas.
Got that right.
Next week. From New York City this morning.
Very a new location.
Good morning. This is Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Investors are pouring a lot of money into funds looking at opportunity zones to take advantage of a break under the new tax law. And Nick Parrish, managing director at Crescent Partners, says as far as the opportunity zones go, real estate is getting a lot of attention.
The program was designed to accommodate both real estate and private businesses. What we found out of the gates was one, from a regulatory standpoint, the regulations were ambiguous with regard to how to own and operate private businesses within opportunity zones. I think some of those have been clarified. Still, it's not easy to fit a private business opportunity into these zones. So largely the opportunity, at least initially, has steered toward real estate, and in particular real estate development.
The tax break was hailed as a way to help distressed areas, but some say the perks are also being used to juice investment in luxury developments. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Connecting to
keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are slipping amid some mixed corporate earnings and concern over trade tensions that linger even as the U.S. and China prepare to sign their initial accord contracts. And the Dow Jones Industrial Average falling after Goldman Sachs Group's earnings missed analyst estimates. And S&P 500 futures edging lower as Target slumps in the pre-market after slashing its sales outlook. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are down 4 points. Dow futures down 50. NASDAQ futures down 4. The DAX in Germany's down 0.3%. 10-year Treasury up 7/30 seconds, yield 1.78%, and the yield on the 2-year 1.55%. NYMEX crude oil is down 0.1% or 7 cents at 58.16 a barrel, and COMEX gold is up 0.5% or $7.50 at 15.5220 an ounce. The euro 1.1149 against the dollar, British pound 1.3005, and the yen at 109.84. Goldman Sachs shares are down 1.6% in early trading. Target is down 7%. And Bank of America also lower. It's down about 0.7%, while bond trading beat estimates and surged 25%. The gain paled in comparison to J.P. Morgan and Citi. And that's a Bloomberg Business Flash. Tom and Lisa.
Karen, thanks so much. Futures -2, now -6, I would put them at. Dow futures -59 at the Bloomberg terminal. We welcome all of you on Bloomberg Radio. Good morning, Boston. New York, Washington, good morning. Early good morning, San Francisco, the Bay Area 960, Sirius XM channel 119, and in every one of our radio jurisdictions and TV for that matter as well. There is a target out with stunning news today. We are hugely advantaged at Bloomberg and Bloomberg Intelligence to have someone really steeped in this. Jennifer Bartesius has really been quite good at looking at big box. Jen, the question I had today, and I thought Francine Lacroix was great with it from London, what's the difference between Target and everybody else? When you walk in a Target store, why is it different?
Well, good morning. So Target is a little bit different because they really have spent the last couple of years investing in their store. They've made it more enticing to come in. And in retail across the board, it's really about this shift to more experiential retail. And Target has done a good job within the big box spectrum of capturing some of that.
That's great. So they've gone experiential retail. What's the digital shift?
So the digital shift is really where more people are shopping online. But what Target is trying to do is do more in terms of same-day fulfillment options. So you can shop online, but then just stop at the store to pick up your order. And that actually accounted for a large portion of their overall digital sales growth in the holiday period.
I love the idea of an experiential Target visit.
It's like existential.
Do you get your hair?
You can be existential and experiential.
Well, I think that the experiential leads to existential. I will say...
you got to go to Chicago, folks, to say that sentence. I could never get that out.
Actually, I think I'm just going to bow out stage left. Jen, I do want to ask you, though, how big of a disappointment this is, because as John kept mentioning, shares of Target up nearly 90% in the past 12 months, but it has been viewed as a bright spot, and this miss was a huge blow to consumer expectations across the board, as you can see the bleed through with Walmart, as well as bond yields.
Yeah, exactly. So their holiday miss, it definitely was below expectations. Nobody saw it coming in. I mean, they had a really incredible season last year at 5.7% same-store sales, and that is a difficult comparison, but they were below expectations for themselves and from the street. And really what it's indicating is that Target has had all of this momentum, but they still are subject to the changes that are happening across the retail landscape. And we've seen some very mixed results coming through for holiday sales from a lot of the other retailers as well.
So I'm trying to understand, though, they actually have been investing dramatically in their online presence along with other efforts. That had been gaining steam. They had a 19% gain in their online sales, but that wasn't enough to offset other weaknesses, in particular having to do with toys and electronics. How concerning is that?
Well, the digital sales growth is, it contains those other categories. And so digital sales growth is not really a concern with regards to what they delivered. It really was about the execution of specific categories, both in the stores and online. And as you mentioned, toys was a disappointment. There was flat sales versus a year ago. Electronics was a huge issue for them. Sales were down 6%, more than 6% versus a year ago. And parts of home. And home is more concerning doing, because that's part of their private label arena, and it's part of what gives them that Target feeling. And so that's something that we'll be watching very closely coming into the new year.
But Jen Bartasius, what's so important here, and of course I read your note cover to cover, folks, I'm lying. I did a word search of Amazon. Come on, that's the elephant in the room. You say in your report, Target can avoid Walmart, Amazon melee. Who says?
Well, the idea is that with the things that Target has been doing in terms of being able to order online and pick it up the same day at the store, that really helps keep them, a little bit secure away from Amazon, where you still have shipping. And Amazon is moving to one-day shipping and in some cases same-day shipping, but it's not consistent for everyone in the country, and it's not consistent depending on what you're ordering. And so that's the niche that Target is going after, and they're still ahead of some of their peers in that space.
That Target feeling. Tom, have you gone into their home goods section and had that Target feeling?
Jen did that. There's a whole securities analysis thing where you get the different pronunciations for the different companies.
Yeah, depending. Well, I will say what's interesting to me is that Walmart shares are down 1.6% ahead of the market open on the heels of this report by Target. How indicative will Target's weakness be for Walmart?
Well, I don't think it's necessarily indicative for Walmart. We watched prices, especially in toys, very carefully throughout the entire holiday season. And Walmart did have price leadership in toys. When we were walking the stores, through the entire season, inventory seemed to be selling through a little bit better at Walmart. So it's not necessarily indicative. It's just that it is another disappointing result in a whole realm of very mixed results for retail. But in and of itself, they were still positive, and that is one thing to take away.
Jen, I don't care. All I want to know, Jen Bartasius, is can you get me the Funko Pop Star Wars, the child Baby Yoda on pre-order? Do you have an angle on that with Mr. Cornell? Can you get me the Baby Yoda from Brian?
That I can't promise, but I think it's one of those things that everybody is trying to get their hands on.
$8.79 pre-order now. Thank you so much. Jen Bartasius with us. Real seriously encyclopedic on mass market.
Have you seen the new Star Wars? Is that your thing?
No, I have not. I'm the only one in the house who's not seen it, but I've heard the Baby Yoda buzz.
Yeah.
One of our members is calling Vet Bill Baby Yoda, and I put a nix to that.
Well, there's a meme to it. I hear about the meme having to do with Baby Yoda. Yeah, no, you don't hear about that in your household?
No.
As well as the meme?
No.
I'll let it lie there. I will say I am very curious to see what Walmart puts out there. I'm also very curious about the Target experience the last time that Tom Keene had the Target experience.
And Nixon was president.
And you were getting your hair blown out. It is an interesting idea,
Actually,
though.
I think I was. It's cheaper at Target than it wasn't.
I will say, though, it is a question with the big box retailers that tried to look like discount stores now trying to give an experience.
I don't buy it. It's like it's like omni-channel was 2 years ago. It's a new phrase. Jen can love it all she wants. Amazon's cleaning their clock.
Yeah.
Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Ready for the hit. Scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
First time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
The Federal Reserve's independence is crucial.
Central banks should be prepared and not presumptuous.
Finance.
In order to grow, you need to innovate.
Global money doesn't like uncertainty.
Investment.
I think the issue in the market is really more about the possibility of a recession in the next couple of years.
I do think we need to get back to where we have always been, the American dream.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from New York City to our worldwide audience. Bank earnings continue as Goldman Sachs delivers mixed results as litigation expenses muddy results. Meanwhile, Bank of America posted better than expected results. Giant retailer Target posted weaker than expected results and slashed its sales outlook. The stock is weaker in pre-market trading. The U.S. and China are scheduled to sign a Phase 1 deal later this morning. The focus now turns to Phase 2 negotiations. Right now, let's get the latest in pre-market stock action with Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at?
I'm looking at the same things you are, Paul. I mean, you got Bank of America, and their shares are down 2%. You know, forget about sort of the top and bottom lines. Fourth quarter growth in bond trading revenue failed to keep pace with the bank's Wall Street peers, and that may explain why the stock's lower. What they call FICC revenue, fixed income, currencies, and commodities, rose 27%. Sounds great, except that JP Morgan Chase was up 86%.
That's right.
And at Goldman Sachs, it was up 63%. And you'd think Goldman, with that kind of number, would be higher. It's not. Down 1.5%. The bank's fourth quarter earnings trailed analysts' lowest estimate in the Bloomberg survey. Goldman set aside about $1.1 billion to cover legal costs tied to a scandal at the Malaysian investment fund 1MDB. You've also got a couple of the largest regional banks lower after their results. PNC Financial down 2.5%, and U.S. Bancorp up 1.5%. The common denominator for them is that their net interest margin, so the gap between what they're earning on their loans and investments and paying depositors, fell more in the fourth quarter than analysts expected. United Health Group, we should note, a company in the Dow Jones Industrial Average, really little change. Sort of an on the one hand, on the other hand story. The health insurance fourth quarter earnings beat analysts' highest projection. The other hand, revenue was lower than the average estimate. And Target, which you also mentioned, Paul, down 7%. The retailer cuts forecast for fiscal fourth quarter sales growth to 1.4%. Target had expected sales to climb as much as 4%. Its stores open more than a year.
Yeah, did not see that coming after the string of good results Target and Walmart have given us.
No. And you mentioned Walmart, those shares down as well. Walmart lower by about 2%. And we should note Tesla's down 1.5%, if only because this is a stock that has doubled in the last 3 months. The surge lifted the electric car maker's market value as high as $97 billion. And that's just $3 billion away from a threshold for CEO Elon Musk to receive the first part of a 2018 pay package. So stocks backing off, though, in early trading. PG&E is up 5.5%. The California utility is seeking to settle a year-long fight with bondholders over a $5 billion payment. An agreement would help clear the way for PG&E to emerge from bankruptcy. Pinterest is up 4%. The provider of online bulletin boards is higher for a second day. Data from the tracking firm eMarketer shows that Pinterest overtook Snapchat to become the third biggest social media company by users. And Pinterest, by the way, rose Tuesday by 9.3%. You've got First Solar down 5%. The solar panel maker was cut the equivalent of cell phone hold at Barclays. Nectar Therapeutics down 12%. The drug maker said would stop pursuing a proposed opioid painkiller after a U.S. advisory panel voted 27-0 against the drug's approval. And yes, I got to mention it, Tom. Sorry, Beyond Meat.
Yes.
3 days in a row. It's like a hat trick of Beyond Meat.
Stock's down 5% in early trading. It's one of the most active shares. Now, the maker of plant-based meat substitutes was cut to the equivalent of whole from buy at Sanford Bernstein. The firm said Beyond Meat's potential sales growth, at least anytime soon, is already reflected in the stock after a 55% jump this year.
That does that just to aggravate me.
Just to aggravate, just to start the day off on it.
Emily Wilkins joins us now on Congress on Washington with Bloomberg News. Emily, have you ever tried Beyond Meat?
You know, I think I did once. I guess it wasn't very memorable. If I can't,
is that what politicians do now when they give the barbecue to rouse? You know, like Lyndon Baines Johnson a few years ago. You go out, you kiss babies, and do the Democrats serve Beyond Meat and the Republicans don't? Is that the stereotype?
You know, I'm sure there are probably some who would like to be inclusive like that. I mean, Cory Booker's a vegan, right? So he's got to have it.
Yeah, we're very vegan here. Emily, I looked at the debate, and then I read Greg Villier's note, which I thought was extraordinary. Full disclosure, he mentions Michael Bloomberg, of course, founder of Bloomberg LP and its radio and TV station. What did you take away of not so much what happens at the caucus, but what did you take away of what it means for like the next 8 weeks or 10 weeks?
I mean, we're coming up on a really interesting time here. Just to clarify a little bit, I mean, you're speaking about impeachment or the Iowa caucus?
No, I'm talking about the Iowa caucus. The race for president. I mean, I get the counting the ballots and figuring out who's sitting on what couch in Iowa, but where are we in 10 weeks?
I mean, in 10 weeks, I think a lot remains to be seen. You're seeing these poll numbers, and you're seeing Bernie Sanders, Joe Biden, Elizabeth Warren, Pete Buttigieg, four names who have been in the lead for months now. They've been the front runners. They're still the front runners at this point. And so I think we're waiting to see if someone can pull ahead, if someone starts becoming the clear choice, if someone starts getting the votes together. Otherwise, we're headed towards a brokered convention.
So, Emily, you know, today's a big day in Washington, in the Beltway, where Nancy Pelosi will walk the articles of impeachment, transmit them to the Senate. Give us a sense of what we should expect next week from the Senate as it relates to impeachment?
Sure. So even though the articles are being voted on today in the House, well, not the articles, but to send the articles over is being a vote in the House today, and there will be a big procedure from the House side to the Senate side to bring them the articles. The actual trial isn't expected to start until Tuesday of next week, just because the Senate needs to do a few procedural things to get ready to have the actual impeachment trial. Once that starts, this is a full-day thing. All 100 senators need to be in the chamber. They need to be seated. They will not have their phones or laptops or any devices with them. And their job is to basically sit there and then write down questions that then can be asked of the House managers who will present the case for impeachment and the White House's team that will defend the president.
So, Emily, I'm seeing some Bloomberg News reporting here that this thing could last into February, which kind of makes it a little bit, strange timing-wise as it relates to the State of the Union and so on. Give us your sense of kind of what the timing is right now.
Sure. I mean, there's been a bit of debate on how long this might potentially last. There's a lot of discussion on whether or not witnesses will be called. That will be something that will be decided at this point, it sounds like it's something that will be decided into the trial. So how long it might last depends on how many witnesses can be called, how many do the Democrats have enough votes for. Remember, they need to get 4 Republicans to agree if they want to have one of their witnesses come. Obviously, Republicans will also, in that case, probably be seeking to have some witnesses appear. And so this thing it could be as short as just a couple weeks. It could be longer. Although you mentioned the State of the Union, I will remind everyone here that back when Bill Clinton was being impeached, he actually gave his State of the Union address while the impeachment trial was going on, and he managed to go the whole thing without mentioning impeachment.
Emily Wilkins, thank you so much. Greatly appreciated our congressional reporter this morning. Futures -7, Dow futures -67. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Thank you very much, Tom. It was the last Democratic presidential debate before next month's Iowa caucuses. During the debate in Des Moines, heard on Bloomberg, Senators Bernie Sanders and Elizabeth Warren have the chance to address their brewing feud. Warren says Sanders told her during a private meeting that a woman can't win the presidential election. Warren stood by her accusation when asked about it. Senator Amy Klobuchar also weighed in on being a female candidate.
I have won every race, every place, every time. I have won in the reddest of districts. I have won in the suburban areas, in the rural areas. I have brought people with me.
The candidates also spent time discussing foreign policy and the drone strike that killed Iranian General Soleimani. They say it made America less safe. Iran's foreign minister disclosed publicly the truth about the downing of the Ukrainian plane last week. Speaking on a trip to New Delhi, Iran's top diplomat Mohammad Javad Zarif.
Last few nights, we've had people in the streets of Tehran demonstrating against the fact that they were lied to for a couple of days. But this was a very serious situation. We believe that it is the fact that it wasn't disclosed early enough.
Initially, the Iranian government stated that a technical malfunction downed the plane. Zarif went on to praise Iran's military for, in his words now, being brave enough to claim responsibility. The House is preparing to vote today to send articles of impeachment against President Trump to the Senate for a landmark trial on whether the charges of abuse of power and obstruction of Congress are grounds for removal. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg Tom.
Michael Barr, thanks so much. Paul Sweeney, I want to take off target here, and I haven't done much this morning on this, which is like ripping into Amazon and actually what they do. Now, let's be clear. It's two businesses, cloud and cardboard boxes stacked up in front of Michael Barr's door, right?
Exactly.
Did you get the Doritos in for the football games this weekend? And
Doritos as in plural?
Yes.
Yeah. Those are called Doriti. But I mean, come on.
Family pack. Right.
All all this talk about retail competing, they're competing against Amazon. Is that how the street sees it, Paul?
I think it is, Tom. And I think, up until today, I think the narrative, from retail was, boy, the big box retailers like Target, like Walmart, were putting up some very, very good digital e-commerce type of revenue growth. And they were, in fact, competing well against Amazon. I mean, we saw 20, 30, 40% gains in e-commerce for, the likes of Walmart and Target over the last 4 or 5 quarters. That's why this quarter's, miss was such a surprise to the street.
Forget about the mathiness. 3 years ago, 340,000. Then 570,000 employees. Then 650,000 employees. That's the latest under Bloomberg Intelligence. And the description screen here, folks, in your cars, AMZN Equity DES.
Type that in.
750,000. They've gone from 350,000 to 750,000 employees in 4 years.
Yeah, I mean, to get those packages to you same day, next day, within an hour, get the groceries. They're putting fulfillment centers and distribution centers everywhere.
They're a triple. I mean, granted, it's a lot of people in warehouses. I get that. It's a triple of J.P. Morgan's employee count.
That's right.
Yeah, of course, Walmart, I get, is bigger, even more so. But I just want to see more analysis about boring cardboard boxes at Amazon and what's that doing to everybody else.
I've never had to deal with an Amazon employee. I've had to deal with Target employees.
I've used their help at Amazon, and full disclosure, folks, I thought it was actually pretty, were they there like instantly? No, but I was surprised. Let's put it on the cable television comparison.
Oh boy.
Well, no. My point is, there's with one group, there's a definite lackluster sort of approach to customer service. I won't say which one.
You think about it. I mean, you can just with a click of a button get anything delivered to your door next day. It's just changed retailing forever.
Do they buy Chewy?
Of course.
They got to buy Chewy.
Yeah,
I mean, come on.
I see Chewy boxes out there.
That's with the lamb and sweet potato puppy chow.
For vet bill?
Don't ask me what that costs. No, it's for me. Of course it was for vet bill. We'll continue. Oh, you think it's funny, John? -7 on futures. This is Bloomberg.
Rich is just a really good guy. The term good egg isn't enough to describe him. He's also certified organic and free range. Rich puts the cap back on everything. The toothpaste, the olive oil, the shampoo, everything. He lets his 10-year-old nephew beat him at virtual tennis, even though he can straight up slay his 10-year-old nephew in virtual tennis. When the toilet paper is running low, Rich replaces the roll on the actual holder, not just on the back of the toilet. Rich is texting and driving. Rich? No. What are you doing, Rich? I was just telling everyone how great you are. Texting and driving makes good people look bad. Visit StopTextStopWrecks.org. A public service announcement brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize-change.
Influential conversations from Bloomberg Television. Here's Taylor Briggs.
Whether it be Huawei or Apple, there is no shortage of tech-related news that is shaping the industry. Among the big themes to emerge, U.S. trade. For more, I'm joined by Steve Case, AOL co-founder and current chairman and CEO of Revolution. Steve, it's great to have you. The first story that I wanted to get some of your thoughts on are about Apple and FBI. This is a little bit of a complicated story, as you know, a December 6th terror attack. Generally speaking, where do you see tech working with government officials, working with the FBI to help, but also be worried as well about protecting people's data?
I think you framed it perfectly as a balance between individuals and society in terms of what technology enables, which is positive, obviously, in many different aspects of our lives, but also some of the risk. This was an issue 5 years ago, actually, with Apple also. There was a case with a problem in San Bernardino, and law enforcement wanted to open up the phone. That went back and forth. There's a new case now. This is just a trend. We'll see more of these cases in the years to come as technology, and particularly the internet, becomes so embedded in everyday life and so fundamental that it's going to deal with a lot of issues in terms of what it enables on the positive side and how do you make sure society is protected from bad things happening.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and break.
Hello, I'm here at the Race for Life, joined by Kerry Cole. Kerry, what inspired you to become a runner?
The only run I do is the school run. My husband and kids, Liam, stop that, are walking this 5K with me. Claire, put your shoes back on to beat cancer.
And what would you say to others thinking of following in your footsteps?
I'd say, put that down. I'd say it's a great day out, even if your family drives you mad.
We're not athletes, we're cancer beaters. Sign up to Race for Life now and get 30% off entry until the 31st of January in partnership with Tesco.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league. Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Depending on how much we recover globally, you're going to see small caps, which have continued to do poorly this year, but I think they're going to maybe finally have a year outperformance overall. And I'm sticking with tech. But I think that's the one area that might continue to do okay. But I think I'd go with the small cap tech rather than the large cap.
How do you shift to that? I mean, are you selling shares of Apple, Amazon, and the rest of them here to do that, or is that with new cash?
I think I'd definitely maybe entertain some selling, Tom. We've in our GAT fund we've put in ETF. You can get an ETF for the S&P 600 technology. Sell your S&P 500 tech. I think if you look at that, small cap tech and large cap tech have done just as well in this recovery since 2009. They've had almost identical results, but they've had very different leadership periods. Sometimes large is dominant, sometimes small. In the last couple of years, it's been large. They're sitting now on a relative basis at the bottom end of a trading range they've been in relative to the large cap tech back to 2002. They're trading right now at a slight discount PE multiple when they've normally traded on average at about an 18% premium. They have a much higher long-term growth rate estimate among S&P 600 technology than the S&P 500 technology has. They're certainly under-owned, unloved, and basically not even known. You probably can't name many of them.
I agree with that.
Yeah. So I mean, and lastly, I think they're not in the crosshairs of regulators. They're just not in the crosshairs of regulators, and no one's looking at small cap.
Okay, but then Paul Sweeney, what's going to be the catalyst to jump these brilliant four-letter stocks that Jim's talking about?
Yeah, I think it's the search for top line growth, which is something you always look for, Tom. I think top line growth technology still has it in lots of pockets as we do a 5G upgrade, as the cloud continues to grow. Jim, I'm interested in your comments about emerging markets. Tom and I are hearing more and more about emerging markets as potential opportunity in 2020. For you, is it driven more by maybe a moderating trade tensions globally, or lower rates, or kind of stabilizing economy? What's kind of driving your thoughts about emerging markets?
I think the biggest thing is a revival in growth. I mean, you're starting to see the OECD leading economic indicator for the global economy just turned up in the last 2 months for the first time since the end of 2017. The Westpac Global Economic Surprise Index has risen dramatically in the last few months. I think we're starting to see signs all across the globe of a recovery. Every time in this recovery since 2009 that you've had a bounce in global growth, emerging markets have outperformed. And I think that they tend to be more leveraged to economic acceleration than is the service-based, tech-based United States economy, for example. But in addition to that, I do think that, we're just juicing the heck out of more cyclical manufacturing in other areas with incredibly low rates, with quantitative easing, with fiscal stimulus. I think it's going to work. I also expect the dollar to go down, Paul. I thought that last year. It didn't work. I'm going to try it again. And if the dollar does go down, that's going to boost some of those returns as well.
Jim, thank you so much. Greatly appreciate it. With Lufload Group, Jim Paulson joining us. So, Paul, this really brings up some interesting questions. And to me, I'm seeing a number of houses. I don't want to say who. I think it was RBC, but I'm not sure. With a shift to small cap, mid cap. That's one of the strategies, not the strategy, but one of the strategies this year is refine mid cap, small cap love.
Yeah, exactly right. And it's they've lagged a little bit. 2019, it's we think about 2019 and that performance we had in the market, the near 30% gain in the S&P 500. It didn't necessarily have the breadth that a lot of market technicians would like to see. Not as many names rising as you would like to see, although that improved a little bit in the fourth quarter. The breadth did. So to the extent that it was driven by some big cap names that we all know, the FANGs, for example, and some other names. To the extent that we can get some of these smaller cap, mid cap names, improve the breadth of the market, that would certainly be, a positive thing for stock traders here. So it'll be interesting to see. But again, I am hearing more about that emerging markets trade for 2020 as well. So it's good to get Jim's comments there, because that seems to be one of the areas that
that's the other one too.
Yeah,
and
that's 10 years that emerging markets have not
to the extent
performed.
That it was driven by some
they had a
names.
big
We all know the
Q4.
FANGs.
I mean, they really. Can you imagine if they pop Q1, Q2 like they did Q4? That solves a lot of 10 years underperformance.
That does. So, but you could make the argument with rates low globally, with global trade tensions moderating, and with maybe if you think about Europe growth moderating and starting to stabilize economic growth, then maybe you've got a case there for emerging markets. We'll certainly pay attention to that going forward here. Here we are 5 minutes before the cash open. S&P down 6.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC, both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA, member FDIC.
This is a Bloomberg Money Minute. Bank of America beat estimates in the latest quarter, giving the shares a lift before the opening bell. Goldman Sachs missed, though, marred by a $1 billion legal charge tied to the 1MBD embezzlement scandal in Malaysia. United Health reports fourth quarter earnings that beat estimates. The health insurance giant's margins improved, and a U.S. tax on the industry was suspended for 2019. Many of the best jobs in America are in the computer science field, according to Glassdoor, paying in the low six-figure range. The top job is front-end engineer, which is someone who designs websites or apps. Speech pathologist came in at number 8, while nursing manager, Salesforce developer, and physical therapist made the top 20 best jobs on the list. Stock futures slightly lower as investors await more details on the signing of that Phase 1 U.S.-China trade pact. Gina Cervetti, Bloomberg Radio.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers. Why all the top-tier experts? Because business is not a magic trick.
Give us a sense of the economic backdrop.
Bloomberg Markets.
Which financial records are these?
Weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney, and the opening bell is brought to you by SEI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS. The S&P 500, little change at the open. It's down a point to 3281. Dow Jones Industrial Average down 0.1% or 42 points at 28,898. And the NASDAQ, little changed, up 4 to 9254. 10-year Treasury up 7/32, yield 1.78%, and the yield on the 2-year 1.55%. NYMEX crude oil down 0.33% or 22 cents at 58.01 a barrel, and COMEX gold is up 0.6% or $8.60 at 15.5330 an ounce. The euro 1.1160 against the dollar, the yen at 109.84. Tom and Paul.
Karen, thanks so much. Greatly appreciate it this morning. I've been waiting, Paul Sweeney, to speak to Mr. Shork. You hear me folks talk about granular research reports. He is the king of granular. He knows which valve out in Kansas on which pipeline only has 3 bolts and not 4 bolts. Stephen, I'm going to start with a 60,000-foot question. Is the United States of America energy independent?
Yeah, I keep on hearing that, especially in regard to the recent geopolitical headlines and that somehow the United States is inoculated. You know what, Tom? Some weeks we are, some weeks we aren't. So if I can say some weeks we aren't energy independent, you know what? We're not energy independent. We have to keep in mind that we still import a considerable amount, 3 to 4 million barrels of crude oil a day. This is very normal. Crude oil is not a homogeneous commodity. It depends on what part of the world you're taking it out of the ground. So it depends on what kind of oil your refinery burns. Some of our refineries can burn the oil that we do produce. Some of our refineries have to buy oil outside the United States to keep the refineries running. We have a balanced market, but no, we are not, quote unquote, energy independent. If we cannot put up a wall and not allow any oil to come into this country.
And you've got, he's got a million charts, folks, from the weather maps and all that out to actually hydrocarbon stuff. In your upper left corner, you slam it with employment in the Marcellus Shale area. Where is that geographically in the United States? Is that Manhattan or is that Bronx?
Exactly. It's a little west of the Bronx.
Okay.
So we're talking north central Pennsylvania, Susquehanna County, and then western Pennsylvania, Washington County. And it extends over across the border into Ohio and then West Virginia. So a considerable amount. And in my report, Tom, my concern here, of course, is the fact that the United States is now, in the industrial side of the economy, is in recession. And that is to say 1/8 of the U.S. economy, steel mills, factories, so forth. We're in recession right now. And so if you've got lower demand by industrials, you have lower demand for oil. And we do have lower demand for oil and gas and all sorts of energy. So my concern, living in the state of Pennsylvania, what is this doing to the employment situation to some of the really hard-hit areas in the Rust Belt that are really benefiting now from shale production? And so far, so good. The employment picture still looks stable, but my concern over the next 2 years, as a considerable amount of debt comes due, that those counties could be in for a rough outing throughout 2022.
Hey, Stephen, I'm looking at Brent crude here, $64.30 a barrel. And it's just a week or 10 days ago when this thing was touching 71 and change. Is that delta simply the risk premium coming out of Iran?
Yeah, and it's mind-boggling to me. If you told anyone 10 years ago that you can attack a major oil facility in Saudi Arabia and 3 weeks later oil prices would be lower than when they were the day after the attack, or that we could assassinate a major Iranian official and oil would be cheaper, $10 cheaper today than it was right after that event, you would have, no one would have thought that possible. So the geopolitics have completely been exorcised out of this market. There is just this overwhelming nonchalance, and it is mind-boggling. And for me, it is a concern because I do think the market on this groupthink that we are energy independent, I do think that this market has lulled itself into this false sense of security that anything can happen and oil will continue to flow and prices will continue to remain attractive. And I think it's a dangerous game we're playing.
And is that game predicated upon, Stephen, just maybe the market's belief that things are different now because of the U.S. shale output? Is that a valid point, you think, or is that overplayed?
It is part of the equation. We have to keep in mind when we're talking about consumer behavior, elasticity of demand. You have two functions. You have the price shock that will alter consumer behavior, but you also have to have a substitute product. And up until 5 years ago, we didn't have a substitute product. So we do now have substitutes onto the market. And of course, I'm talking about EVs, either full EVs or plug-in hybrids, such as the Shork household has one. So
you do. You're an energy guy. You're an oil guy.
I know, and my energy consumption has been, my oil consumption is a fraction of what it was 3 years ago. And you know what? That is oil demand that's never coming back to the market. So every time you see a Prius or a Tesla or an Audi e-tron, that's demand that's never coming back onto the market. So that does have a big impact in the long term.
Steve, nobody cares. What we do care about is at the back end of your report, Stephen Shork, you've got the famous TSR weather demand recap.
Yes.
Come on, it's doom and gloom. You've got the coldest part of the nation is directly over Biscuit in New Jersey. We go to John Tucker. John Tucker, when it really gets cold in New Jersey, do you see like ice on the beach?
Oh, no. Well, you see
icebergs?
In the bay, you certainly do see ice where it's an amalgam of salt water and
salt water and ice and foam.
So it's brackish. Yeah,
it's
definitely
brackish.
Freezes.
Steve, you got New England and the North Atlantic states in one chart, gloomy cold, and then you got the entire half of the nation gloomy cold. How cold is cold?
Cold, anything, above, sustained temps below freezing, in my estimate. So if you remember, we talking about New Jersey, if you remember that polar vortex from the 13-14 winter, you had icebergs coming ashore on Martha's Vineyard. You had the ocean almost freezing, and now saltwater to freeze, we're talking about water temperatures below 29 degrees. That is cold. And what's crazy about this, guys, is that we do have this cold finally now in the forecast, and the one commodity that normally responds to cold weather is natural gas.
Yeah.
And because we heat our homes and our businesses with natural gas, and guess what? Natural gas is going in the complete opposite direction. And this is a function of even though you do have the weather demand, what don't you have? My concern. We have an industrial recession, so you don't have that industrial side that is really keeping a lid on natural gas prices.
So it's interesting. So how about another consumer-facing energy, gasoline? Is it lower for longer just at the pump?
I do believe so. I think we've settled into this area where if we kind of look at the options markets. And the option markets, you always want to look at the option markets because this is the insurance market. These are the guys who are signing risk of how high or how low prices will go out into the future, and then they're going to sell you an insurance policy that doesn't happen. And what we've seen with the option markets through the first 6 months of this year, the option writers, the guys selling these options, are telling you that they think the ceiling in this market is between $63 and $66. This is WTI, and the bottom of the market is between 55 and 53. And so when we run our quantitative models, our Monte Carlo simulations, it all kind of dovetails right into that range. So if you're looking at low 50s and up to the mid 60s, that is stability at the pump, and that's a good thing because most producers can make money with oil in that mid $60 range, and most consumers, oil consumers, can certainly afford it at the pump.
Stephen Shork, thank you so much. Greatly appreciate it. With a short group of the Shork Report this morning. Let's green on the screen. 29,011 on the Dow.
Yeah.
Thank God I dollar cost average in at 0.005% per session.
You don't want to move the market time. You don't want to push the market up.
I don't. The mass there is just it's incalculable.
The orders start flooding into the trading desks around the street.
They do. We'll have to spread it around to different houses. VIX 12.41. Let us digress to the news in New York City. Here's Michael Barr.
Thank you very much, Tom. Thank you, Paul. The latest Democratic presidential debate featuring 6 qualifying candidates was held last night in Des Moines, Iowa. You heard it right here on Bloomberg Live. It's the last debate before the Iowa caucuses, less than 3 weeks away. One issue was the feud that's been brewing between Senators Bernie Sanders and Elizabeth Warren. Sanders has denied that he told Elizabeth Warren in 2018 that a woman couldn't win the presidency. Senator Warren disagreed.
Can a woman beat Donald Trump? Look at the men on this stage. Collectively, they have lost 10 elections. The only people on this stage who have won every single election that they've been in are the women, Amy and me.
President Trump discussed the fallout over the U.S. killing of Iranian General Soleimani. Trump spoke during a rally last night in Milwaukee.
The Democrats are outraged that we killed this terrorist monster.
The president told the crowd, if you want to keep America safe, just vote Republican. Democrats have released more documents purportedly adding more details about President Trump's scheme to coax Ukraine into announcing an investigation into his political rivals, including former VP Joe Biden. The documents show how Rudy Giuliani associate Lev Parnas sought to set up a meeting between Giuliani and Ukrainian President Volodymyr Zelensky. This morning will mark the first spacewalk of 2020. It will be performed by two female astronauts. Jessica Meyer and Christina Cook will replace batteries on the solar arrays on the outside of the International Space Station. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Tom?
Michael Barr,
thanks so much. I got the blue button. It's my first day. Leave me alone.
Okay.
Alex Cora is out of the Red Sox. I'm not thinking clearly.
Gosh. What is going on up in Boston and New England? We got the Patriots with all these gates, deflate gates, spy gates. We've got
the Red Sox had a deflated baseball, and Tom Brady was stealing signs or something like that.
With Cora back with
Let's go to this. Let's vamp to this. I mean, I was going to go another direction with Disney, but Michael Barr, this is something. Houston, Red Sox, New York Post picks up on Carlos Beltran with the Mets.
Well, this is something.
Is it over, or is there more to come?
Well, there might be more to come, but I think what's amazing is you had a 2017 World Series manager and a 2018 World Series manager, and now they're out the door.
Let's be clear. This is not some guy out in the bullpen, pulling his ear or rubbing his shoulder.
See you right now.
Right. Or remember Little League, where if I was a catcher at Little League a million years ago, you practice getting your signs in, but the pitcher couldn't see the signs because you were hiding them so much. And then the guy on third base is leaning over the bag trying to look at your sign, right? What were they? How did they do this?
Well, this one, there was a camera that's out, as everybody has seen the shot, that you get on television.
Yeah.
And they got a feed apparently from that camera, and they depicted the signs that the catcher was giving.
So the coach is in the casket flag and across the turnpike, sitting at the bar, and he's got the sign, right?
He's got the sign.
And he's at the casket flag. He puts a Narragansett lager beer down on the counter. Then what happens?
Well, with the Astros, if you remember, you might have heard a big bang of like a trash can. And what the players were telling them that this play or this pitch is coming up.
What the Red Sox do? Pick up the Narragansett lager beer?
Well,
I'm channeling Kurt
picked
Gowdy.
up Alex Cora, the American sportsman over there. I like that.
Yeah, that's right. So you're right. The last, two World Series winners.
Yeah.
2017, 2018. Wow.
This is a huge deal.
Oh yeah. This is and the Astros have been fined $5 million. That's the maximum that MLB can fine someone.
There you go, Tom. So, I mean, it's just, there's something going on up in Boston. I don't know
what other teams? Come on, give me the dirt. You got 22 seconds.
Well, see, now we don't know.
The Detroit Lions, are they stealing the signs?
No, obviously they're not.
They should still. Michael Barr, thank you. This will be a theme, no doubt, on Bloomberg. Business and sports as well. Actually, we're making jokes about it. It's really serious.
Big stuff.
Do we want our children at the casket flag and drinking Narragansett lager beer? I don't think so. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. Unsold Manhattan condos are getting New Year's resolution makeovers thanks to international travel website Booking.com. At 25 Broad Street, Booking is furnishing 20 unsold units and offering users a 2-night stay for $20.20. The Instagram-ready units have themes like Be More Stylish, a $1.7 million 2-bedroom apartment reimagined as a fashionista's closet. And, of course, there's a Be More Active apartment with exercise machines and a juicer for getting in shape. The Tesla Model S can already hit 60 miles an hour in 2.4 seconds, an extraordinary speed that beats a Lamborghini Huracan by half a second. For some people, that's not enough, and they're paying upwards of $50,000 to hot rod their electric cars at tuning shop Unplugged Performance. The California-based tuner wants to be to Tesla what AMG is to Mercedes. Upgrades include body kits made from carbon fiber, suspension systems, and brakes. I'm Andrew O'Day, Bloomberg Radio.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Peoples of London, are you like Sergey, working your paws off from 9 to 5, then cooking for whole family? Well, I, Alexander, have taken responsibility for tonight's splendid evening meal.
Ooh, let me guess. Meerkat meals?
Of course. You know how I roll. Get 2 for 1 on food with Meerkat meals at your local favorites, like Cut and Grind, when you buy through Compare the Market. Qualifying purchase, app only, 2 for 1 on selected food, participating restaurants, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
It's in breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and stocks are higher, and this is amid some mixed corporate earnings. There is still concern over trade tensions that linger, even as the U.S. and China prepare to sign their initial accord. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 is up 0.2%, up 7 points at 3290. The Dow Jones Industrial Average up 0.3%, or 83 points at 29,022. And the Nasdaq's up 0.2%, or 20 points at 9271. 10-year Treasury up 5/30 seconds, yield 1.79%. Yield on the 2-year 1.55%. NYMEX crude oil is down 0.4%, or 22 cents at 58.02 a barrel, and COMEX gold is up 0.5%, or $7.80 at 15.5240 an ounce. The euro 1.1153 against the dollar. The yen is at 109.90. Watching shares of Goldman Sachs, they are down about 0.8%. Its comeback quarter for trading was marred by an almost $1.1 billion legal charge as the firm gets closer to a settlement of the 1MDB scandal. Bank of America is down 2.1% as it expects a decline in net interest income. And Target shares also falling, down 6.6% after slashing its quarterly sales outlook following a holiday season that missed its own expectations. And that's a Bloomberg Business Flash. Tom and Paul.
Karen Moscow, thank you so much. We appreciate that. Looking at the markets here, we have them open. We have some green on the screen. S&P up 7, Dow up 85. NASDAQ
green on the screen is down 29,000.
That is beautiful. We're on a Dow 30,000 watch, I think.
We're on 3,300 SPX watch. Have we gotten there yet?
Cameron Christ joins us here from Bloomberg Markets. Cameron, what are you looking at in the markets here today and as we kind of wind our way through earnings season?
Well, I think the focus today is obviously on the trade deal that's being signed. We will hopefully finally get some of the nitty-gritty details about what's contained.
We have to, right? They have to.
Well, the bit that's not locked up in the super secret squirrel annex that we can't, that we won't have access to because we don't want anyone to front-run soybeans.
Lisa Abramowitz is the only one with the key to the super secret squirrel door.
But, I think the interesting angle here is there's almost certainly going to be a discrepancy between what the U.S. agreement says in English and the Chinese agreement says in Mandarin, because there always are in these sorts of things. And how does the market interpret that moving forward? It's always easy to assume that everybody thinks like you do.
Will the Chinese release a version in Mandarin, do you think?
Yeah. I mean, any agreement of this magnitude, there will be an English version.
And analysts will actually try to compare them?
They should do, yeah.
Okay.
Absolutely.
Quarterly conference call going up with Goldman Sachs right now, and we are thrilled to have Cameron Christ with us as we rip up the script. CNBC says Goldman Sachs sold entire Uber stake in Q4. Walk us through that. They're involved in the transaction as an original investor. They've made ginormous money. This is not like they bought it on the IPO, to be clear.
Well, yeah, you would hope not. Well, I think that, kind of tells you what their vision is for the future of Uber. People at Goldman are fairly smart people, and they wouldn't be selling if they thought it was going to appreciate dramatically in price.
Yeah, I'm looking at the intraday here on Uber. That's been such a Pharaoh's in that long, big.
Yeah.
34.86, 34 and 7/8.
And just to recap, Tom, that IPO, $45 a share. So,
I have to use the joke every time. The IPO investors have been taken for a ride.
Yes, there you go. Well, I think again, that's a lesson for
how the return engagement here.
Exactly. I think that's one of the lessons from 2019 in the IPO market. It did change in 2019 from the prior couple of years. You have to show investors a path to profitability, as opposed to the Amazon model where you didn't necessarily have to do that, but these companies aren't Amazon. They're not Jeff Bezos. They don't have that credibility. So if you're an Uber or a Lyft, and certainly a WeWork, you have to show IPO investors we have some path to profitability.
Yeah, well, there's a couple of angles here. One is we've also got a story somewhere in the recesses of the Bloomberg terminal about the
super secret.
Hopefully not super secret, about the amount of dry powder in private equity.
Yep.
And this is the issue, right? These guys have a tremendous amount of money that they need to deploy.
Yeah.
And that naturally means that the valuation of all these private companies gets elevated in a way that maybe public markets aren't prepared to accept. And while Amazon is often cited as a precedent, let's not forget that Amazon didn't actually spend that long a time when they were cash flow negative. Even when they weren't turning a profit, the cash flow was there
because it was unit based.
Yep. So
like
these quote unquote disruptors that sell $1 for 95 cents and show revenue growth but negative cash flow, they're operating in a completely different sphere from what Amazon was 20 years ago.
And I'll point out, folks, anecdotally, for those of you that aren't in the cities where we're using this stuff all the time, Lyft tried to raise prices, and they've got incredibly sharply priced in the last couple of weeks. I'm taking Lyft rides that are cheaper than a taxi cab. Explain how they do that.
Well, they lose money. On
every ride.
When Uber first started, I believe they were generally cheaper than taxis as a way to win market share. And then obviously once they had sort of built the brand, then they could jack the prices up, move to the more dynamic pricing. But even so, the marginal cost that you're paying for the convenience it's not enough for them to make money. And so if they're now feeling price pressure again on the downside, I got to say I don't see a route to profitability here.
Time for one final question? Dow 29,037, right on the cusp of 3,300 on SPX VIX 12.37. Is there exuberance out there? Do you see rational or irrational exuberance? I don't see it.
Well, I will say this relative to treasuries. I think you could argue that equities are not showing irrational exuberance. You could construct an argument that everything, the entire spectrum of financial assets is showing irrational exuberance in the sense that everything is expensive relative to cash, given the risks that you are incurring on a forward-looking basis. But what's going to be the comeuppance, that's what we need to know.
Cameron Christ, Yoma's Duty, they really helped us out from the beginning of surveillance here to the end of it today, writing on markets for Bloomberg and really doing it in a sophisticated, he's always correlated.
You can ask him anything. He's got a pretty smart answer. Not too smart.
Well, except I will on TV, they asked me about BlackRock. I didn't have a clue. And I said, I don't know.
Cameron Christ, he spent weeks, I say, on Wall Street. Up 105 on the Dow, 29,040. Paul, what do you see as you go into your next hour?
It's interesting. I think what's going to be very interesting, Dallas Fed President Robert Kaplan's going to sit down with our own Michael McKee. So that'll be very interesting at the bottom of the hour. So we'll carry that live on Bloomberg Radio. It'll be interesting to get to see Mr. Kaplan's view of the economy and view of the Federal Reserve
We got to end the hour because Cameron's getting fan letters now coming in. People are sending in. Larry Fink sent in a letter. He's excellent because he didn't know anything about BlackRock today. Oh, I love busting Cameron's chops. Up 102 on the Dow. We are produced by Richard Truman. He owns
Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
On this week's On the Media, tips and tricks for how to inoculate yourself against war propaganda.
If you watch Fox News, you'll see what can be fairly characterized as war lust. I shouldn't even say Fox News alone because it does permeate everywhere. And you're really got to watch out for that.
War themes and memes on this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
Financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Where's your views on the municipal bond landscape?
The market does not like uncertainty, does not react well to uncertainty.
There's a whole lot of optimism around the valuation of Uber.
What is Ford saying about the self-driving car?
Breaking market news and insight from Bloomberg experts.
Maybe we're getting hooked on debt and low interest rates.
The black hole called power could be a bigger black hole.
A toxic brew of slower revenue growth.
There is now this belief that Amazon
maybe can do anything.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up, there's a fire hose of news today from Wall Street to the Beltway. We're going to be talking about bank earnings with Bank of America and Goldman Sachs shares falling. We're also going to be talking about, of course, the latest on impeachment with House Speaker Nancy Pelosi giving an update, plus a conversation with Dallas Fed President Robert Kaplan. Right now, though, let's get a check on the markets. We've got Karen Moscow. Karen.
All right, Lisa, thank you. And this update's brought to you by New Jersey Institute of Technology, a top 100 national university in the latest U.S. News and World Report college rankings. Learn more at news.njit.edu. And the Dow Jones Industrial Average, it's past 29,000 right now. Stocks are higher. This amid some mixed corporate earnings and concern still over trade tensions that lingered even as the U.S. and China prepare to sign their initial accord. Again, still higher. The Dow Jones Industrial Average up 0.4% or 121 points is at 29,062. S&P 500 up 1/3% or 11 points at 3294. And the NASDAQ is up 0.4% or 39 points at 9291. The 10-year Treasury up 3/32, yield 1.80%. The yield on the 2-year 1.56%. NYMEX crude oil is down 0.4% or 24 cents at $57.99 a barrel. COMEX gold is up 1/3%, up $4.80 at $15.49.40 an ounce. The euro 1.1150 against the dollar. The yen is at 109.94. A measure of underlying U.S. producer prices rose in December at the slowest pace since August 2016, indicating modest inflationary pressures. The so-called core index of prices paid to producers, which excludes food and energy costs, increased 1.1% from the previous year. The New York Fed's Empire State Manufacturing Index rose to 4.8, and we are also watching for the Federal Reserve to release its beige book at 2 p.m. Wall Street time. And that's a Bloomberg Business Flash. Paul and Lisa.
Karen Moscow, thank you so much. We have green on the screen on the Dow, 29,059, so crossing above 29,000. That is notable. Bank earnings today, front and center. Let's get a sense of what's going on in the markets. We welcome Bloomberg Stocks editor Dave Wilson. And also joining us in our Bloomberg Interactive Broker Studios is Yaman Onaran, senior finance writer for Bloomberg. So, Dave, banks front and center, what are you looking at in the market today? More green.
Well, sure, but not with the banks. And, that's sort of an interesting piece of the puzzle because, yesterday, the focus of what was going on, and especially in bond trading. I mean, the trading business more generally, but bond trading, you've really seen some substantial growth. To the point where, Bank of America comes out today with a 27% increase in bond trading revenue, and it's well behind its peers. But, you put together the numbers out of Bank of America and a couple of the biggest regional banks, U.S. Bancorp and PNC Financial, and what you see are disappointments in terms of net interest income. So that gap between what they're paying their depositors and what they're earning on their loans and investments narrowing more than analysts were anticipating. That's certainly something to watch. Given what we've seen in terms of interest rates and the idea that maybe they kind of stabilize here. You have this sort of school of thought that the Federal Reserve may be on hold for a while in terms of monetary policy. So what we're seeing in terms of the fourth quarter numbers may be around for a while, and the banks are going to have to be able to manage through that.
Well, I'm glad that Yaman Onaran then is here to kind of dig into the stories here and talk about how specific they are to each bank versus some kind of larger takeaway. Goldman Sachs in particular standing out with some of their legal expenses. Under the hood, it didn't look so bad. Why are the shares down so much?
Under the hood, if you look at the whole year, it's actually not that great. Everybody had, the rivals had bigger, much bigger fixed income rebounds for the year, and Goldman's, it pales in comparison. And that's their core business. For JP Morgan, they do, their fixed income rebound is wonderful. It's big numbers. It helps. But they also make as much money from net interest income because they have a huge consumer and corporate lending business. Goldman doesn't have that. It's tiny. So their investment banking is down. Okay. And that's also a big thing for Goldman. Without investment banking, what is Goldman? They're trading and investment banking. Everything else is tiny.
So it's a trading and investment banking story for Goldman Sachs, among other issues with the legal costs thrown in the mix. Meanwhile, shares down there 0.5% or 0.5 percentage point. But you've got Bank of America shares down nearly 2%. People blaming the consumer for that. Is that correct?
Right. Well, I mean, Bank of America, it's a little bit connected to the analyst call that's going on or about to finish, I think, is where they sort of expect net interest income to decline this year. And last year they managed to keep it steady at least. It didn't fall while interest rates declined significantly thanks to Fed cuts. This year the CFO said that it's probably going to go down. And that's bad news because Bank of America, like JP Morgan or Citigroup, really needs that net interest income as well. They're like 50-50 businesses. 50% is trading, investment banking, and all these other markets related things. But 50% is the consumer and the corporate lending business, and interest rates matter. And even if they're on hold, you'd think at least net interest income would be stable. If they expect it to go down, then they're not able to price the differences that well. And that's a tricky business. Lending and borrowing while interest rates are going down, you could benefit from them going down a little bit, or you could lose from them depending on how they reprice. Your loans could reprice faster than your deposits or vice versa. So that's probably where Bank of America is losing.
Dave Wilson, interesting piece of news coming out of the Goldman Sachs conference call. The CFO saying that the Goldman Sachs has exited its position in Uber. That's pretty interesting because they were there early, correct? They were in that private market round, weren't they?
Yeah, but at the same time, you look at the reaction in Uber shares, and there basically isn't any reaction. So, I mean, it's sort of a marker in terms of the institutional support for Uber, you can argue, and certainly reflective of what we've seen in the past few months with the whole focus on profitability as opposed to growth, in terms of what investors are willing to put their money in. That said, I mean, it's just not much of a response to the latest revelation. And Uber shares at the moment stuck about 22% below their initial price of $45 back in May. So the damage has been done there.
Meanwhile, across the street, we're seeing some upgrades to the profit forecast, including of Apple. Apple target raised to $355 a share from $275 at Canaccord on broad growth. You have Qualcomm's target raised at Canaccord as well. And you have, this idea that we are going to see a resurgence in the tech space more broadly. Kind of amazing given the fact that we already have had such massive gains last year, no?
Well, look, I mean, them that has gets, you can argue as far as that goes. I mean, you have to bear in mind when it comes to what's going on with analysts, the share price projections. I mean, Tesla is especially noteworthy. I mean, just this week we've seen one firm, Oppenheimer, come out with a target above $600. Then Jefferies followed with a $600 projection. And you've actually got Tesla down a bit today. But this is a stock that had doubled in the space of 3 months. So, it just goes to show you, that there is a certain element of momentum, you might say, not only to company stock prices, but also to what analysts consider the future for company stock prices.
Bloomberg Stocks editor Dave Wilson, thank you so much for joining us. And Yalman Onaran, senior finance writer for Bloomberg, on those bank earnings, which continued across today. So again, Goldman Sachs, Bank of America this morning reporting a little bit weaker than expected. And the growth rates just not in the fixed side of the thing, not as strong as JP Morgan.
And of course, throw into the mix here, we have also the trade deal that's supposed to be signed at 11:30 a.m. Eastern time. And we're expecting to actually get a look at that 86-page document, which may be released at the time and give some details.
They have to, right? They have to disclose it.
They will disclose it, but there have been some areas that have been redacted. Right now, Nancy Pelosi, House Speaker, speaking about impeachment. Let's take a listen.
Because everything is about time. How we use it, how we market. And today is an important day because today is the day that we name the managers, we go to the floor to pass the resolution to transmit the articles of impeachment to the Senate, and later in the day, when we have our engrossment, that we march those articles of impeachment to the United States Senate. As I've said, it's always been our founders when they started, when in the course of human events it becomes necessary, when Abraham Lincoln 7 years ago. Thomas Paine, these are the times that try men's souls, the times that found us. Again and again, even our poets Longfellow. Remember, listen, my children, and you will hear the Midnight Ride of Paul Revere on the 18th of April in 75. Hardly a man is now alive that remembers that famous day and year. It's always about marking history using time. On December 18th, the House of Representatives impeached the President of the United States. An impeachment that will last forever. Since December 18th, there have been comments about when are we going to send the articles over. Well, we had hoped that the courtesy would be extended, that we would have seen what the process would be in the Senate. Short of that, that time has revealed many things since then. Time has been our friend in all of this because it has yielded incriminating evidence, more truth into the public domain. Since we passed the articles on December 20th, 2 days later, new emails showed that 91 minutes after Trump's phone call with President Zelensky, a top Office of Management and Budget aide asked the Department of Defense to hold off on the Ukraine aid. On December 29th, revelations emerged about the OMB director and acting chief of staff Khomeini's role in the delay of the effort by lawyers in the administration to justify the delay and the alarm. This is very important, that the alarm that the delay time caused within the administration. On January 2nd, newly unredacted Pentagon emails, which the House subpoenaed and the president blocked, raised serious concerns by the Trump administration officials. They were concerned about the legality of the president's hold on the aid to the Ukraine. On January 6th, former Trump National Security Advisor John Bolton said he would comply with a subpoena to testify and that he has new relevant information. On January 13th, reports emerged the Russian government hacked the Ukrainian gas company Burisma as part of their ongoing effort to influence U.S. elections in support of President Trump. And just yesterday, the House committee, two of our chairmen here, Chairman Nadler of Judiciary, Chairman Schiff of Intelligence, Chairman Elliot Engel of Foreign Affairs, and Chairwoman Maloney of Government Reform, they released new evidence pursuant to a House subpoena. Lev Parnas, you know who that is, an associate of Rudy Giuliani, that further proves the president was a central player in the scheme to pressure Ukraine for his own benefit in the 2020 election. This is about the Constitution of the United States, and it's important for the president to know and Putin to know, the American voters in America should decide who our president is, not Vladimir Putin in Russia. So today I'm very proud to present the managers who will bring the case, which we have great confidence in terms of impeaching the president and his removal. But this further evidence insists that, and we wouldn't be in this situation had we not waited, insist that there be witnesses and that we see documentation. And now you see some of that change happening on the Senate side. I hope it does for the good of our country and to honor our Constitution. So today, on the floor, we'll pass a resolution naming the managers, as I mentioned, appropriating the funds for the trial and transmitting the articles of impeachment of the President of the United States for trying to influence a foreign government for his own personal and political benefit. Chair Adam Schiff of California, lead manager. Chairman Schiff is, as you know, chair of the Permanent Select Committee on Intelligence, is serving his 10th term in Congress. Excuse me. Before Congress, Mr. Schiff was a California state senator and served as a federal prosecutor in the U.S. Attorney's Office in Los Angeles for 6 years, most notably prosecuting the first federal FBI agent ever to be indicted for espionage. Chairman Jerry Nadler, chair of the House Judiciary Committee is serving his 15th term in Congress. Mr. Nadler served as the top Democrat on the Judiciary Subcommittee on Constitution, Civil Rights, and Civil Liberties for 13 years. Before Congress, Mr. Nadler served in the New York State Assembly for 16 years. Wow. Chair Zoe Lofgren, Chair of the House Committee on House Administration, which has jurisdiction over federal elections, is a senior member of the House Judiciary Committee. Ms. Lofgren is serving her 13th term in Congress. This is Chairwoman Lofgren's third impeachment. As a Judiciary Committee staffer in the Nixon impeachment, as a member of the Judiciary Committee on the Clinton impeachment, and now as a manager in this impeachment of President Trump. Chair Hakeem Jeffries of New York. Chairman Hakeem Jeffries is the chair of the House Democratic Caucus and is currently serving his fourth term in Congress. He's a member of the House Judiciary Committee. Before being in Congress, he served in the Assembly of New York for 6 years, an accomplished litigator in private practice before running for elective office. Mr. Jeffries clerked for the Honorable Howard Baird Jr. of New York District Court for the Southern District of New York. Congresswoman Val Demings of Florida. Congresswoman Val Demings is a member of both the House Permanent Select Committee on Intelligence and the House Judiciary Committee. Ms. Demings serving her second term in Congress. Before Congress, Ms. Demings served as the Orlando Police Department for 27 years, part of that time as the first woman police chief in Orlando. Congressman Jason Crow of Colorado was a member of the House Armed Services Committee. Mr. Crow served our country, bravely as an Army Ranger in Iraq and Afghanistan. Before running for Congress, Mr. Crow was a respected litigator in private practice in Colorado. Congresswoman Sylvia Garcia of Texas. Congresswoman Sylvia Garcia is a member of the House Judiciary Committee. Before Congress, Ms. Garcia served in Texas State Senate previously. She was the director and presiding judge of the Houston Municipal System and was elected city controller. Ms. Garcia was later elected the first Hispanic and first woman to be elected in her own right to the Harris County Commissioner's Court. As you can see from these descriptions, the emphasis is on litigators. The emphasis is on comfort level in the courtroom. The emphasis is making the strongest possible case to protect and defend our Constitution, to seek the truth for the American people. I'm very proud and honored that these 7 members, distinguished members, have accepted this serious responsibility, again, to protect and defend for the people, defending our democracy. When we leave here, a little bit later at noon, we'll go to the floor and pass a resolution naming the managers officially. But I wanted to say more about them here and to say that the decision to come down in favor of litigators is necessitated by the clear evidence that we should have witnesses and we should have documentation, and we have to make the strongest prosecution, not only of our very strong case, but of all the information that has come forth since. We're going to take a few questions.
Speaker Pelosi.
Yes, sir.
Time has only strengthened your case. Why did you rush to have a vote before Christmas? And, Mr. Chairman, why hold only public hearings for just 2 weeks? Or couldn't you stretch this out longer in order to get this more information that you consider has only bolstered your case?
Well, I'll yield to the distinguished chairman, but I will say that we had a strong case for impeachment of the president and removal for the president. Anything more would be in terms of where we go in the Senate, and I'll yield to the chairman.
We've always felt a certain to Nancy Pelosi, House Speaker, announcing the lead House trial managers. She named, among other people, House Judiciary Chair Jerry Nadler and Intelligence Chair Adam Schiff. She named 5 others as well. These are the people who are going to go before the Senate and present the case for impeaching President Trump. She said that it was really important to emphasize the litigation experience. The goal was to present the best possible case. She is currently accepting questions alongside Adam Schiff as well as the others involved in the case. June Grasso joining us now, legal analyst and host of Bloomberg Law, which airs weekdays at 10 p.m. Eastern here in our Interactive Broker studios with us. June, what was your big takeaway here from the people who she named to manage this case in front of the Senate?
So as she said, there is an emphasis on lawyers and litigators. A lot of them haven't litigated, by the way, in many, many years. But what she didn't mention, but what you can tell by looking at the litigators and at the lawyers that she's chosen, is that it's a really diverse panel. Men and women, older and younger, Hispanic, African American, and that will be a contrast to what the Republicans will have.
June, thanks so much for joining us. Right now we're going to go to Larry Kudlow, the White House economic director. He's making some comments right now. Larry Kudlow.
Don't mean to be rude, but
when we are on the trade deal with India, phase one.
I'll get back to my point.
We are negotiating with India.
Do you have any timeline when we are going to sign it?
I don't have any announcements for you today, but we are hard at it. We are hard at it. I would refer you to Ambassador Lighthizer and his office on that. I don't want to get ahead of it, but we are hard at it. Yes, ma'am.
Sir, China obviously is bringing to buy a large quantity of U.S. products.
Yes.
But how can China meet the target without more tariffs coming off?
Well, they seem to think they can, and they got significant tariff relief. But we have kept certain tariffs on. One of the openings to this successful agreement, or let me say the successful completion of the agreement, was the president's decision in good faith to suspend the December tariffs, which were 150-ish, 160 billion. And goodwill matters a lot. And by the way, while we were doing that, they were in the market buying commodities. Also goodwill and good faith to enhance the deal. And we lowered tariff rates on the September proposal. And we maintained the 25% tariff on the earlier proposals, much of which really surround our, what I call the family jewels of technology. We cannot afford and must defend. America is the greatest technology inventor and innovator in the world. That's why we have the strongest economy year in and year out. And I think the Chinese understand that. But again, that will be the basis for future discussions. But at the moment, as I said, one brick at a time. We'll see how that works.
Is there any secret agreement between U.S. and China?
To what?
Any secret?
There are no secret agreements. I don't know where that stuff came from.
Right.
Yes,
are you surprised the tariffs didn't have a greater effect on the American economy?
No, I hate to say it, but I argued that till I was blue in the face last year. I didn't say zero effect, but I called it minimal and de minimis. And, because, China sends a lot more exports here than we do there, the economic burden was about 4-1 against them. And that was my view. I didn't say zero impact, but de minimis. So I was interested to see, I guess, a story in the Wall Street Journal about that. And anyway, no, I'm not surprised. But that's then. I think, just my view, we are now, in large part because of the China deal. We haven't mentioned USMCA, which is very important. We have much more total trade with Mexico and Canada than we do with China by a scale of about 2-1. Those two trade deals, an easier monetary policy, maybe even signs I'm seeing some my Wall Street economic friends, global growth might at least be bottoming. So I think we're transitioning into a faster growth rate. We had a softer 2019. I get that. Probably come in around 2.3, 2.4. I think we'll do at least a half better in 2020, and maybe more than a half better. Wish Boeing would solve its problems and start producing. That's a drag on the economy by half a point. But I think we're transitioning at a faster pace that will be more akin to what we had in 17 and 18. Just a couple more. And
listening to Larry Kudlow, Director of National Economic Council, talking about the trade deal that is scheduled to be signed later this morning. Lots of news flow coming out of Washington, what with the trade deal and impeachment. Let's get a sense of how investors should be discounting all of this news that might be just something in addition to fundamentals. We welcome Greg Hahn, President and Chief Investment Officer of Winthrop Capital Management, based in Indianapolis, but joining us here in our Bloomberg Interactive Broker studio. So, Greg, today's just a perfect example of what investors have been really dealing with. It seems different from past cycles, which is the news just never stops, and it's geopolitical, it's political. How do you kind of factor that into your whole process?
Good morning, Paul. It's actually hard to take a step back and get away from all the zigs and zags that come from all of the stories and really look at the bigger picture.
So what is the bigger picture?
So we think that we actually see this economy. The risk to the downside is it's slowing. And so I respect Larry Kudlow immensely. We're seeing numbers that are coming in slightly lower than what he's representing. And we're concerned actually that the Boeing shutdown, which we expect to get resolved in the first quarter, is going to have an impact on economic growth. You tie that alongside the auto industry right now, and it's gonna hit the manufacturing sector hard.
Although there was a story today that was really interesting about how some of the old indicators that are tied to the manufacturing-led economy are not necessarily leading indicators for the rest of the economy. How specific are those manufacturing sectors and for frankly compensated for by the services and the consumer sector just generally?
Well, that's a good question. So with respect to autos, it's 17 million units a year for the last 3.5 years is a lot. And so at some point the appetite for autos is going to decline, and the source for that is lending. So we're seeing very aggressive lending to support these numbers. At some point it's going to give. The consumer, though, Lisa, is the key. I think you nailed it in bringing up the consumer. And our concern is the consumer actually is showing signs of health, but at the same time we're seeing consumer debt going up. So if you're supporting your quality of life through increased borrowing, whether it's credit card, auto loan, student loan, ultimately it's going to be problematic down the road.
One could argue, I think very correctly, that the markets move up in 2019 globally, driven by accommodating Federal Reserve, accommodating central bankers around the world. Is that your expectation for 2020 as well? I think the markets will be supported by an easy monetary policy. But when you go back and you look at what happened in 2019 with the S&P 500, because of the decline in the fourth quarter, we started with a PE ratio around 14. So really, with no earnings growth, it was really a PE expansion. So we're starting this year at a PE of 19. I think there's room to move, but the margin for error is going to be higher for investors.
Consumer debt certainly picking up, although in volume. But if you look at the bank earnings, you could see that defaults and delinquencies aren't necessarily increasing in any major way. So is it basically a clear runway here for that?
So the conundrum is the credit cycle. Do we really have a credit cycle? So what's happened with these easy monetary policies is as companies have been able to extend out their maturities. So the liquidity crisis or the credit issues that go with it, they've been able to refinance. Those that can access the market have been able to refinance it. We're watching it closely, and our concern, our focus is in the leveraged loan market, where we do see some deterioration. The investment grade market, even though there's a shift to triple B from single A, it's still pretty solid.
Just 20 seconds here. Fed rate cut this year?
Nope.
No Fed rate cut.
The risk is to the downside, and it's going to be really hard in the face of an election trying to stay independent if you start to lower interest rates the closer we get to the election.
Greg Hahn, we could spend all day with you. Thank you so much for being with us. Greg Hahn, Chief Investment Officer for Winthrop Capital Management, trying to put into perspective some of the news that we're getting. And it really is a fire hose today. Whether it's Washington, whether it's bank earnings, whether it's trade, we're going to be discussing it all. But right now, we are very, very pleased to say we have our own Bloomberg's Michael McKee joining us. He's International Policy and Economics Editor. He's sitting down with Dallas Fed President Robert Kaplan at a time of conviction that the Fed is on hold with a bias to possibly cut rates, with the market currently pricing in another rate cut for 2020, despite the fact that the economy seems to be doing okay. We're going to get retail sales tomorrow. Really the key held up in the consumer. Let's head over to our own Michael McKee. Michael.
Welcome to our Bloomberg radio and television audiences. I'm Michael McKee, Bloomberg's international economics and policy correspondent. Joining me now, Dallas Fed President Robert Kaplan. Thanks for being with us
today.
Good to see
you, Mike.
We know basically that you and others on the Fed see about 2% growth for 2020 and about 2% inflation. So the forecast doesn't change all that much. But I'm wondering, how fragile do you think the economic expansion is right now? Would something that happens with Iran or China or something really knock us off track because we're so late into it?
Well, if anything, my estimates for 2020 have firmed a bit. And setting aside some unpredictable event, I still think global growth is going to be sluggish but stabilize. Manufacturing is going to be sluggish but stabilize. And business fixed investment is going to be dragged down by energy spending, for example, and it'll be sluggish, but it's going to stabilize. And then you combine those three things with a strong consumer, I think we're going to have a solid year next year, and my confidence in that might actually be improving a little bit.
So consumers, you feel, are fairly strongly confident at this point, and the scare of last summer is in the rearview mirror?
Or put it a different way, there may be months where the consumer pulls back, saves more, doesn't spend, but the capacity of the consumer to spend is solid. Household balance sheets are in much better shape than they've been in 10 years. Not perfect, but better shape. And we know the job market is very tight. So the consumer's got the ability to spend, and so over time, I think they will.
The president is signing the Phase 1 trade agreement with China today.
Yeah.
What are CEOs in your district telling you about the impact that will have?
So it's positive. It creates some stability. It doesn't remove trade issues going forward. We're going to have trade issues with China for years. But a Phase 1 deal is much better than the alternative, which would have been continued the September tariffs in place and escalating tariffs. And so this is much better than the alternative. So it's not that the deal itself for businesses I talk to is so significant, but the stability is significant. And then you combine that with hopefully USMCA getting ratified and some stability in the trade relationship with Mexico and Canada. And it doesn't remove trade issues and trade uncertainty, but it creates a little bit more predictability and a little more stability, and that's positive.
Should we see more business spending then?
Not necessarily. I think on balance, anything that helps reduce uncertainty will help business spending. And so I think it'll get a little better this year, a little bit more stable. You offset that against the fact that a big part of business spending in the United States, I mentioned earlier, is energy. And because global growth is sluggish, we think energy capex in 2020 could be down as much as 10 to 15%. And so you'll still see sluggish business spending, but on balance, all things being equal, less trade uncertainty will help that.
Well, obviously, the fracking industry has gotten more productive as years go by. So if we see that kind of decline in energy infrastructure spending, do we also see job losses at the same time?
We're seeing some job losses, actually, and we have seen some job losses. So you're right. The industry is more productive, can do more per well and per rig with fewer workers. But all things being equal, job growth in the energy sector is going to be very sluggish.
Now, you've cut rates three times last year, the last time in October, which investors saw as a sort of a green light for investment. And after your December meeting, when you basically forecast no rate moves this year at all, the S&P's been up 5% since then. Do you worry about your impact on asset prices?
Yes, I do. And I think there's three aspects. There's one, rates are lower. And we lowered rates last year, and I was a supporter of those rate reductions because I was worried about weakness in the economy. Then there's a perception that the bar is higher for future rate increases. I don't know if I completely agree with that, but that's part of our communication. And then the third issue is, in order to address this repo issue, we've grown the balance sheet. Now, I think we've done what we had to do, but I'm very sensitive from here that we need to be finding ways to limit and temper the growth in the Fed balance sheet. But I'm conscious all three of those actions are contributing to elevated risk asset valuations, and I think we ought to be sensitive to that at the FOMC, and I certainly am.
Well, you say it's not QE. A lot of our guests on this program from the market say it is QE. Yeah. So is it not QE if they believe it is?
So it's, on the one hand, it's not QE because we're not buying along the curve. On the other hand, my own view is it's having some effect on risk assets. It's a derivative of QE, in that when we buy bills and we inject more liquidity, it affects all risk assets, and I'm of that view. So for me, this is why I say growth in the balance sheet is not free. There's a cost to it, and we ought to be very disciplined about it and sensitive to it. I think we've done what we've needed to do up to now, but I think it's very important that we come up with a plan and communicate a plan for winding this down and tempering balance sheet growth, and I'm very hopeful that we will do that.
We are speaking with Dallas Fed President Robert Kaplan on Bloomberg Television and Radio Worldwide. How surprised are you that unemployment has gotten this low without triggering inflation? Is there a change in inflation dynamics? So
I'm not that surprised, and you know, for the last few years I've been talking about the cyclical elements of inflation and the structural elements. So unemployment being low historically would have triggered more cost increases, wage increases, would have led to price increases. That's not happening now because the structural issues, which are technology and technology-enabled disruption, and the power of distributed computing power has really changed the ability of businesses to raise prices. And I think that's intensifying, and I expect it to intensify. So I actually think a good part of this muted inflation picture, which I expect to continue, is structural and is not going away. And I don't know that it's that susceptible to monetary policy, by the way. And so I take a little bit different view about how we ought to think about this. I would like us to take actions that help get to our 2% target, but not at the expense of financial stability and creating undue excesses and imbalances.
Well, that brings me to the policy framework review. You're a year into it. Where do you think it ends up? What are we going to see?
For me, the most important things, I think it's important that we highlight explicitly in the framework review that we'll consider explicitly financial stability, not just full employment and price stability, but also financial stability. I think you may see some changes to the way we articulate the inflation target. Either a range is something I'd be open to debating, or a longer averaging period. But those are analytics, and they're not a substitute for our judgment. And so I wouldn't want to see us be making analytical changes that commit us to future actions. So I think the most important thing from the framework review is a reiteration for me that we take a balanced approach to monetary policy that's forward-looking.
Kind of raises the question, I guess. The other big question for the markets is, with rates so low, what do you do when we enter the next recession? There's a big debate out at the American Economic Association about whether you have the tools.
We have less firepower than we've had historically. It goes without saying, with the Fed funds rate at 1.5 and 1 3/4. We certainly have the balance sheet tools, but for me, I've been emphasizing this situation, and what we see going around with central banks around the world suggests that we need broader economic policy in the United States and globally. We need fiscal policy, we need structural reforms, policies to grow the workforce, improve productivity, invest in infrastructure, and it can't all be the central bank. And so, yes, we have less firepower here. And for me, it's not that we ought to come up with new and more exotic tools at the Fed. It suggests this is a sign that we need to broaden economic policy in the United States to policies beyond just monetary policy.
Well, you guys are all saying we need additional fiscal policy, but there's no fiscal authority saying, yes, we should do that. When you talk to members of Congress, what do they say?
When I talk to members of Congress about slowing workforce growth and the need to invest in education, on both sides of the aisle, it's hard to not find enthusiastic agreement. There's just, the question is, can we get some of these policies done? What I'm finding is there is action being taken locally, for example, on education. So Texas is a good example where the state just passed substantial education reform, and there's substantial initiatives to do skills training. So there are actions happening. We just need to ramp them up. And when I'm talking about policies other than monetary policy, I'm not talking so much about a fiscal boost as I am about structural reforms, immigration reform. And we've done a lot of work at the Dallas Fed that suggests we would be well served to look at Canada to have a more skills-based, employment-based immigration system. But if we don't have immigration, we think workforce growth is going to continue to decline. So those are the kinds of issues we need to be flagging, and monetary policy is not a substitute for action on those fronts.
Well, you're sort of describing what Larry Summers has called secular stagnation, low rates, low growth, low inflation. Alvin Hansen talked about it in the 1930s. Is that where we are today?
I don't know I won't give a label to it, but I think there's no getting around the fact that the structural drivers in the U.S. economy and globally are leading to slower growth. And what I mean by that is if you go back to the 70s, if workforce growth, let's say, was around plus or minus 2%, it's declining down to the point where in the 2010s, we think it'll be less than 0.25%. We've got to deal with that reality. I don't think we're talking about that enough. And we need policies, and we can do things that address that. But the reason I keep flagging it, and I'm glad others are flagging it, is there are things we need to do beyond just monetary policy.
Well, one last question about monetary policy. You may have heard it's an election year.
Yes, I've heard that.
The Fed historically stays on the path that they're on during an election year. If they're raising, they raise. If they were lowering, they lower. You're on hold. Mm-hmm. As you get closer to November, does that put more pressure on you just to stay on hold?
I know it's been a factor in the past. I think, though, everything I try to do in this job, and I think my colleagues around the table take the same approach, or try to divorce ourselves from political considerations or political influence. And if I felt strongly as we got into the middle of the year or later that we needed to take action, I would still want to be advocating action. At the moment, I'm not forecasting that, but I think we've got to do what's right for the U.S. economy.
All right. Robert Kaplan, president of the Dallas Federal Reserve Bank. Thank you very much for joining us today.
Thanks, Mike.
We'll send it back to you.
Thank you so much. Michael McKee, excellent interview. Really interesting to hear what he had to say, in particular that the Federal Reserve has less firepower than it has had historically, really trying to shift the focus to the fiscal stimulus side of things. Hey, politicians, are you going to get your act together and do something? We're going to break it all down just in a second. Bloomberg Markets is brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit Commonwealth.com to learn more. Also saying, and this I thought was very interesting, Dallas Fed President Robert Kaplan just talking with our own Michael McKee, saying he hopes that we could find a plan to temper the balance sheet growth of the Federal Reserve. This comes as there has been a lot of focus on, in particular, the repo facility that the New York Fed has been operating and how much that's been expanding, certainly the short-term holdings of the Federal Reserve. Joining us now for his take, Brian Chapata, Bloomberg Opinion debt columnist in our Interactive Broker Studios. Brian, that to me stood out because we've been hearing all of the other issues, that they don't think that the inflation's taking off, that they're not going to be politically involved, they want fiscal stimulus. The balance sheet really is one of the big debates right now, right?
Yeah, it stood out to me too, so great minds think alike. But, Robert Kaplan historically has been on the forefront of saying, beware of financial stability, I'm worried about asset prices getting too high, and that is a real concern right now. You have people who are simply saying, well, the Fed's expanding its balance sheet, the Fed is, doing these repo operations, therefore risky assets will continue to go up. And it's not completely that one-for-one of a correlation, right? And I think the Fed is conscious of that and does not want to be seen as we're pumping liquidity into the markets, therefore take as much risk as you want because we got your back. It's really a repo issue, and I don't think they've necessarily done all they need to do to cement that in the minds of investors.
Is there going to be, quote unquote, a permanent solution to the repo market issue?
Oh, man. I mean, I'm not sure, because you have people who are saying, oh, we need to start considering the standing repo facility, but there doesn't seem to be any movement on it. I'm surprised at the lack of movement, honestly. It seems like they don't want to have to do that, and they're hoping that just by doing these temporary operations that things will settle down eventually.
But meanwhile, the New York Fed has signaled that they're going to continue the operations for longer than they had expected, which is pretty much par for the course. They always open these temporary facilities and then they hold them for far beyond just temporary. It becomes a sort of longer term thing. But I'm just wondering, do we have any sense of what the discussion is in terms of permanent fixes here?
The thing that keeps coming up is standing repo facility, but it's unclear if there's really an effort underway to implement that, because it will take time rather than just doing what they have been doing.
Brian, this is a Federal Reserve that has described itself as being data dependent. We're in 2020 right now, year 11 arguably of this financial economic cycle. What data do you think is really front and center for the Fed right now?
Yeah, I think it's inflation, right? That's the only barrier. That's basically the only way they're ever going to hike rates is if inflation comes in hot and stays hot for a meaningfully long period of time, or whatever the phrase is that Jay Powell uses. And it's unclear what exactly that is, but there's a feeling that this isn't enough, that even if you have 2% readings on core CPI or what have you, that's not going to be enough for them to move. They need to see a material move higher.
Yeah, and just to that point, we got producer price increases today. We got that side of inflation coming in weaker than expected. Yep. We got CPI yesterday weaker than expected. still going up, right? We're still seeing modest inflation, but coming in lower than expected, even with this, 11th year of low interest rates, ultra low interest rates. Talking of ultra lower interest rates, the market's pricing in another rate cut by year end. The Fed's saying we're on hold. Is the market going to force the Fed's hand yet again?
So I don't think so. I think the reason why the market is priced to another rate cut by year end is because it almost has to be. Because the barrier to a hike is so high, what else are they going to do?
Hold?
They could price in.
There is another option.
They could price in a hold, but the risks are skewed far greater towards one more rate cut than they are towards one more rate hike. And so the market almost has to price that way. And the market's been wrong before on these long-term visions. Really, the time that you start to think about if the market's going to force the Fed hand is almost meeting by meeting. If the market's pricing a 90% chance of a cut for a meeting that's in 3 or 4 weeks, and the Fed doesn't want to, the Fed will do it. But for the full year, not so much.
Brian, thanks so much for joining us. We appreciate you coming and sharing your thoughts. Brian Chapata, debt markets columnist for Bloomberg Opinion. You can read all of Brian's opinion work and that of all of our opinion columnists on Bloomberg.com/opinion, and for terminal users at OPIN Go. Just recapping the discussion that Michael McKee had with that Dallas Fed President Robert Kaplan. Right now, let's head down to Greg Jarrett, Bloomberg News, for a Bloomberg Business Flash. Greg, what do you have?
Well, once again, stocks are at all-time highs as the USA and China prepare to sign their initial trade accord. Dollars weaker against most major peers, and treasuries are up. We look at those numbers every 15 minutes throughout the trading day. S&P 500's up 0.4%, up 13. The Dow's up 0.5%, up 152, and the Nasdaq's up 0.5%, up 44. The 10-year is up 5/32. The yield is 1.79%. West Texas Intermediate crude is down 1.4% at 57.43 a barrel. COMEX gold's up 0.4% at 15.50 an ounce. The dollar yen, 109.95. The euro, $1.1149, and the British pound, $1.3016. Declining interest rates are causing pain for B of A. The company's shares are down after it reported the net income for the consumer division slid 9.7%, hurt by falling interest income. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney. on Bloomberg Radio.
We are less than an hour away from the signing of an 86-page trade agreement, the Phase 1 deal between the U.S. and China that we have not seen yet, but evidently at 11:30 when they sign it. It does exist, and evidently they are going to release it, so we will be parsing through that. It has a lot to do with ag purchases, agricultural purchases, so we are so pleased to say Sal Gilberti joining us now, President, Chief Investment Officer, and co-founder of Tucrium Trading in Brattleboro, Vermont. Sal, just give us a sense of what we do know about the agricultural purchase agreement here within this trade pact.
That China will be buying ags again from the U.S., and that's about it. We don't have many more details, unfortunately. But what we can assume pretty confidently is that China will buy as much agricultural product as they need from the United States. Whatever number is or is not stated in the agreement really doesn't matter. We think that using 2017 as a baseline, that's the last time we didn't have trade war implications between the two nations in their trade. China bought about $24 billion worth of U.S. agricultural product. If you just take their rate of GDP growth, and agricultural usage is probably a little faster, that means they need about 27, 28 billion right now. We're here at Tucrium projecting about 31 billion in 2020 that they'll buy, and they're going to immediately come in and buy pork, beef, and soybeans. There's no question, because they need those things. How much more they buy of other things is up for debate, but we do have some projections for that, which we've published.
Sal, I'm looking at your research, and it's just amazing that looking at those numbers you just were discussing. We're really talking about soybeans here when we talk about what China imports from the U.S. Is there a sense that across the commodity spectrum that China needs to maybe rebuild or restock their inventory, and say that you could see maybe some unusual surge in demand over the first 6, 12, 18 months?
Yes, absolutely. They've drawn down their soybean stocks. They've drawn down their soy stocks, they of all kinds, and they've drawn down their corn stocks. They've also, massively drawn down their pork stocks. And so they'll come in and immediately buy soybeans to rebuild. They'll buy some corn to rebuild and freshen up what they had, because they had old inventory. They were stockpiling for quite a while. They've almost run out of pork, if you will. They're really tight. They're releasing supplies for the holiday coming up a week from Saturday, when their New Year starts, where they have enormous pork usage. So they've got to replenish their soybeans. They've got to replenish their pork. They're supplementing their meat-based protein with beef, and so they'll come in and buy beef quite a bit too, as well as poultry. Chicken and eggs are a small part of it, but they've just been freed up to buy chicken feet and the parts that the Chinese use, where we just send to rendering plants. So we think soybeans, we think pork, we think beef, we think, no question, poultry. Those will be the things they come in and buy immediately.
How much are we going to expect these increased purchases to spike the price here, or to increase the price in the U.S.?
Well, that's a magic question. I think we can expect a floor. I think there's no doubt that it's reasonable to assume there could be a floor in prices. And understand, we've been trading soybeans and corn in particular right near their cost of production anyway. And they do trade for quite long periods of time at their cost of production. That's the natural thing they do. And when there's a supply disruption, because demand is continually growing, you often see pretty good spikes upward in the price historically. Corn's doubled twice in the past 13 years from right where it's trading now. So, people are starting to layer in, asset allocate. We think once they sign and it's confirmed that they'll be buying, and they will be buying because they need our agricultural products, there's no question that there should be a floor under the price. How much it goes up, it remains to be seen. It depends how fast they buy. It depends, of course, on the weather, and it depends on some insight into what the Chinese will be doing in their economy, including ethanol. They are blending ethanol into their fuel, and while they were going to enforce a 10% mandate, they realized their infrastructure is not capable of that. They're not abandoning ethanol in any way, shape, or form. And that's going to put some big demand on corn globally. And remember, this is the 7th year in a row that corn demand globally will break a record. It's the 3rd year in a row that corn demand globally will outpace demand, global production. This year, soybean demand globally will outpace production. So the prices sitting where they are now, you can reasonably assume there's certainly a floor. How high they go, we'll see.
Hey, Sal, I have an odd question. Is there enough inventory? Are the American farmers, can they meet this surge in demand? Is there a bunch of inventory in the Midwest and the Farm Belt to meet this surge in demand?
Yes, there is. There's enough inventory, certainly for this year. That's the interesting part about ags. That's why prices, in corn have doubled from these same levels twice in the past 13 years. What happens is year to year you can replace it. But the 1 year when you fail, you're using ags. They grow, you harvest them, there's a big pile. You're using that pile until the following year's harvest. And if the following year has a problem with harvest, that's when the issue comes in. And so that's why ag markets, they always trade kind of at their cost of production, and then they explode higher when you get that blip in production. Because remember, demand just keeps going up. That's just a steady pattern.
Sal Gaberte, thank you so much for joining us. Sal's president and CIO and co-founder of Tucrium Trading Limited, based in Brattleboro, Vermont, talking about the trade deal likely to be signed at around 11:30 Wall Street time, and that will be the big component of that, at least, is going to be the Chinese purchase of agricultural products.
Indeed. And right now, just to give you a sense of where we're at, the NASDAQ is really leading gains today. Initially, before the market opened, it was a bearish tone. Now we're seeing a rally, and this actually comes in the heels of a number of upgrades to the expectations of the likes of Apple heading into the year, particularly with respect to China and a possible upswing there in the consumer. Meanwhile, in Washington, D.C., the impeachment proceedings do continue, and Nathan Hager has been following them all. Nathan, let's kick it over to you.
Okay, thank you, Lisa. House Speaker Nancy Pelosi has announced she is indeed ready to lift her weeks-long hold on articles of impeachment against President Trump. At her weekly news conference on Capitol Hill, Pelosi named the team of impeachment managers who will prosecute the case that could begin in the Senate as soon as Tuesday. House Intelligence Chairman Adam Schiff will lead this team of 7 prosecutors. Judiciary Chairman Gerald Nadler will also be an impeachment manager. No matter what happens in the Senate trial, Pelosi says one thing is for certain.
On December 18th, the House of Representatives impeached the President of the United States. An impeachment that will last forever.
And Pelosi insists that holding on to the impeachment articles since December 18th gave lawmakers the ability to show the American people the necessity of having a fair trial. Later today, there will be a floor vote to approve the impeachment managers and to transfer articles of impeachment over to the Senate. After that vote, Pelosi and others will participate in a signing ceremony. That'll be followed by a ritual in which this team of 7 prosecutors will physically carry the 2 articles of impeachment over to the Senate. And again, Senate Majority Leader Mitch McConnell says Chief Justice John Roberts could swear in the senators later this week. The White House has already issued a statement saying, quote, "The only thing Speaker Pelosi has achieved with this sham, illegitimate impeachment process is to prove she is focused on politics instead of the American people." The statement goes on to say the Speaker lied when she claimed this was urgent and vital to national security, because when the articles passed, she held them for an entire month. Much more to come as Bloomberg Markets continues in Washington. I'm Nathan Hager, and this is Bloomberg.
Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
You love TuneIn for live-breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown. touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Throws right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Bayless. Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
What we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up, Target. What happened during the holiday seasons? Weaker results coming out of Target stock down 6 or 7%. We'll have the news there. Plus, automobiles and technology. It's amazing how technologically advanced autos are becoming, and even more is coming down the road. We'll dig into that. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Paul, another intraday record for the S&P. That's the 6th consecutive trading session for intraday records. It's largely ignoring disappointing quarter results from Goldman Sachs and Bank of America. Healthcare and utilities lead the gains, outweighing declines in the financial and energy sectors. U.S. markets received an added boost after White House Economics Advisor Larry Kudlow promoted more tax cuts. Michael Houston at CMC Markets tells Bloomberg he does not see much that could sway the Fed from its stated course, except maybe the U.S. consumer.
At the moment, we're not seeing any real evidence that the U.S. consumer is holding back in terms of its spending. You look at the payrolls numbers; they're still fairly solid. Yes, they were disappointing, but at the end of the day, we've had 9 years of fairly solid jobs growth, and there's no indication that is slowing down. Wages are a little bit lower.
We're checking the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500's up 0.4%, up 14. Dow's up 0.6%, up 170, and the Nasdaq's up 0.5%, up 42. The 10-year is up 5/30 seconds. The yield is 1.79%. West Texas Intermediate crude oil's down 1.2% at 57.54 a barrel, while COMEX gold's up 0.3% at 15.49.90 an ounce. The dollar yen 109.99. The euro's $1.1151. The British pound $1.3024. Peloton's not just a fad, and none of the lower-priced interactive stationary bike alternatives represent a legitimate threat to its dominance in the space. That, according to Wedbush's James Hardiman, hints Peloton is up nearly 5%. That's a Bloomberg Business Flash. Bloomberg Markets continues with Lisa and Paul.
Thank you so much, Greg Jarrett. Well, we are looking at record highs on the broad equity indexes, certainly in NASDAQ leading the charge. Russell 2000 trying to get there. Still kind of, I think I can. Dave Wilson, Bloomberg Stocks Editor, joining us here in our Interactive Broker Studios. Dave.
Well, it's working its way up. That's what counts at this point. You've got the Russell higher by more than 0.5%. Well, the S&P 500 is only up 0.4%. So smaller companies with bigger gains than their larger peers. And there's none bigger within the Russell 2000 than the one for Fluent, whose ticker is FLNT. The provider of data analysis software has climbed 56.5%. Preliminary fourth quarter revenue beat estimates of the only two analysts in a Bloomberg survey. Momenta Pharmaceuticals, ticker MNTA, has risen more than 16%. JP Morgan lifted its rating to buy from hold based on a blood treatment's potential to fit into a $6 billion market. And Clovis Oncology, ticker CLVS, has added more than 14%. U.S. regulators agreed to decide whether to approve the company's prostate cancer drug Rubraca by May 15th. And the Russell's steepest decline belongs to Concrete Pumping Holdings, ticker BBCP. The service provider has lost about 12.5% after bad weather weighed on fourth quarter results. And Accelerate Diagnostics, ticker AXDX, has dropped 6%. The company's revenue forecast for this year was lower than analyst projections.
Bloomberg Stocks editor Dave Wilson, thank you so much. Target, the shares are down over 7% this morning. The company posted a rare stumble on holiday sales, came in weaker than expected. To help us dig into the details, we welcome our good friend Jen Bartash, senior U.S. retail, staples, and restaurant analyst for Bloomberg Intelligence. She joins us on the phone from BI's headquarters in Princeton, New Jersey. So, Jen, kind of a rare stumble for Target. I seem to be calling quarter after quarter some pretty solid top-line numbers. What happened?
Yeah, good morning. So Target has had a stellar year thus far, but really going into holiday, it seems that perhaps there was a little bit of a miscalculation with regards to the shorter selling season, but they really underperformed in critical categories for holiday, which included toys, electronics, and parts of the home decor part of the store.
So we've had a bunch of hours to digest the release and some of the possible explanations for it. Has anything become clear in terms of how much this is a Target-specific issue and how much this is a widespread, likely disappointment for all retailers in the last holiday season?
Right. So to put that into context, Target, still posted positive same-store sales growth. It was just below expectations. Some of this seems to be Target specific because in certain categories at Target, they did very well. Apparel was up 5%, beauty was up 7%. And so it seems that there were some miscalculations specific to Target in a couple of those critical areas. But when you look at the broader retail landscape, it's been a really mixed holiday season. And so even though consumer spending has been up, especially online spending, different retailers have really had posted mixed results.
So, Jen, I know from reading your research over the years, I can't just look at top line, same store sales. I also have to look at promotion activity because that goes right to profit margins. What did we learn from Target or maybe some of the other retailers you follow about the promotional activity to drive those holiday sales?
Yeah, so one of the categories that we track very closely is toys, and we tracked toy prices throughout the holiday season, and Target consistently was more expensive than both Amazon and Walmart, so that may be playing into some of the results in toys that they had. With regards to promotions over Black Friday and Cyber Monday, Target's promotions were different this year. So last year on Cyber Monday, they gave 15% off on everything on their site. This year, it was very strategic, specific discounts. And so even though that may be better for margins overall, it seems that it did have a definite impact on top-line sales.
Going forward, do we have a sense of Walmart? We know that their shares also fell in sympathy with Target. Are they going to face some of the same issues?
Well, with regards to specifically toys, we think that they may have fared a little bit better just because they were more price competitive and their out of stocks rose, which implies that they ran through their inventory at a little bit of a faster pace than Target did across the season. Across the broader store, it's hard to say. They also had a strong holiday last year, and so it could well be that they did well in certain categories and less well in other categories, much as Target did.
Jen, what do we learn from the e-commerce side of Target? I remember, last 4, 5, 6 quarters, really strong e-commerce revenue growth kind of led me to believe that, the Targets and the Walmarts of the world have kind of figured out how to compete against Amazon.
Mm-hmm. Well, what was interesting about the revenue growth and the percentage, it was 19% for Target over the holiday season, which is not bad. But what we're really seeing is that a big portion of that overall growth came from same-day fulfillment options. So that's where you order it and either you pick it up at the store, deliver it to your car, or you go in the store to pick it up. And that actually is the part that is interesting with regards to competition against Amazon, because even though Amazon has free next day shipping and in some markets free same-day next-day shipping, it's still very difficult to compete with a Target or a Walmart who can offer that same service, and you know that you're going to have it in hand by the end of the day.
Just real quick here, Jed. Earlier, you were speaking about the Target experience. What is the Target experience?
Well, when their core customers go in and they expect to be delighted, and a lot of the
do they?
They do. I mean, when you go in, a lot of the Target core customers are into looking for that new piece of fashion, that new accessory, the new beauty product, and a lot of the investment that Target has made in their stores has really been to reformat the stores to make it easier to access and to be inspired by the products that they have there, and that has really bolstered same-store sales over the last year. Now they're coming to where they've done a lot of those remodels, so it'll be interesting to see going forward whether they're able to sustain that same amount of traffic into their stores that they were able to generate off the heels of those renovations.
Jen Bertashis, thank you so much of Bloomberg Intelligence. Paul literally turning my mic off and saying, don't do it. Whatever you're going to say, don't do it. And I got to say, my only point is the big box stores, the whole design of them was to make it look like you're going to get a deal, not an experience, right? I mean, that was sort of the idea. I understand going in and being excited about getting something that you can get there, but delighted? I mean, yes, I guess.
That's what the millennials and the Gen Xers want. They want experiences.
I understand
I hear
that,
that across retail.
I don't disagree with that, but I think people just want a good deal.
Okay.
Anyway, right now let's be saved by Nathan Hager, who's in Washington, D.C. Nathan.
Thank you, Lisa. House Speaker Nancy Pelosi has named 7 Democrats to her team of impeachment managers against President Trump. House Intelligence Chairman Adam Schiff will lead them. The announcement comes after Democrats released new documents last night Pelosi says puts President Trump at the center of the pressure campaign on Ukraine.
This further evidence insists that, and we wouldn't be in this situation had we not waited, insist that there be witnesses and that we see documentation.
After today's floor vote to lift the delay on impeachment articles, the House managers will physically carry them to the Senate. Later this hour, President Trump signs the Phase 1 trade deal with China. And Bloomberg's Martin DeCaro reports top trade officials are downplaying the lack of major concessions from Beijing in this agreement.
Significant tariff relief is not expected to happen until after the November election. Treasury Secretary Steven Mnuchin says Beijing must first keep its promises.
When we do Phase 2, as part of Phase 2, and as I've said, it could be 2A, 2B, 2C, there will be tariff reductions as part of that. That's an incentive for them to do additional phases.
For now, the U.S. agreed to cut in half 15% tariffs on $120 billion in Chinese imports and delay others. In Washington, Martin DeCaro, Bloomberg Radio.
Attorney Michael Avenatti is under arrest. IRS agents accuse him of violating bail before his federal trial on charges of extorting Nike and stealing from his clients. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
If you promise to cover the latest financial and business news from Asia,
we're talking about social enterprises in Asian countries
with expert analysts who really understand Asia.
Aren't you encouraged with respect to U.S.-China trade?
Then you must be us.
Tell us about the trend within this part of the world.
Bloomberg Daybreak Asia.
What sort of fiscal stimulus do you think we'll see?
Tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. Ah, that's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
GOAT, G-O-A-T, acronym, stands for Greatest of All Time. As in, spaghetti sandwiches for dinner? They're my fave. Dad, you're the GOAT.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Here at Tesco, we're celebrating over 100 years of great value with even more great prices that take you back. Like a 4-pack of Magnum Classic ice creams, now half price, from £3.20 to just £1.60, all this week at Tesco.
Selected larger stores subject to availability. Offer ends 27th of January.
Pascal gobbles up the rebound and slammed it down.
Catch your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown.
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Cutting for the net, scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
trends and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Now, the surge into the green as stocks are up to all-time highs as the U.S. and China are signing their initial trade accord today. Dollar is weaker against most major peers, and the treasuries have gained. We look at those numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500's up 0.3%, up 11. The Dow's up 0.5%, up 144. And the Nasdaq's up 0.4%, up 36. The 10-year is up 7/32 with a yield of 1.78%. West Texas Intermediate crude's down 1% now at 57.66 a barrel, while COMEX gold's up 0.4% at 15.50.80 per ounce. The dollar yen 109.95. The euro's $1.11.59. And the British pound $1.30.23. BlackRock solidified its standing as the world's largest asset manager in the fourth quarter, hitting a record $7.43 trillion in assets and extending its dominance in exchange-traded funds. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Will my kids actually have to get a driver's license and drive themselves, or will the cars just drive for them? One of the key questions for a lot of people is the future of the automotive industry in light of new technologies. And joining us now is someone who really is at the forefront of that future. Guillaume Devauchel is Vice President of Innovation and R&D at Valeo Group in San Francisco right now. And Guillaume, thank you so much for being with us. Last week was CES, the Consumer Electronics Show in Las Vegas. It has turned increasingly into an auto show. Can you just give us a sense of the update on what the cutting-edge technology was that you saw there and that you unveiled?
So for sure, cutting-edge technologies are everything about electrical vehicle, be it 48 volt or high voltage, but also everything around autonomous driving. But what was really new at CES and really striking is that this technology can be applied not only to classical car per se, but also any moving vehicles, be it a scooter, a droid, a shuttle, or even a truck. So this is really fascinating that this technology is coming from the classical car industry, can spread all over the moving objects.
When do you think... Okay, go ahead.
As an
please.
example, Valeo was showcasing electrical motor, which is currently fitted in German premium cars, but which is also used to power three-wheelers in India and also droids in China. So as you can appreciate, the same technology can be applied in a much wider scope, and this was really for me the trend at CES.
So Guillaume, give us a sense, when autonomous vehicles, when do you think that they will be really commercially viable in the marketplace? Are we still many years away?
Yeah, but there is a shift in the meaning of autonomous vehicle. I'm sure the standard feature you enjoy today would have been considered 10 years ago as an autonomous vehicle. So we are expecting much more than we have today, but we already have significant automation in your car. Just to give you one figure, Valeo has get an order intake last year for 1 billion sensor over the 5 next years, which is exactly what we have produced over the past 25 years. So you can see how the market is accelerating.
What do you think the most important product is that's going to come to bear fruit in the auto tech world?
I mean, LiDAR is a must. I mean, being able to position and to sense the environment is really a must. And LiDAR is becoming, let's say, the cutting edge of the technology. No question for that.
Guillaume, thank you so much for joining us. Guillaume Devauchel, Vice President of Innovation and R&D at the Valeo Group. That company's based in Paris, but he's in San Francisco. Not surprisingly, close to Silicon Valley where all that technology is. And, the last time I was at CES a couple of years ago, the 4 big exhibition halls, 2 of them were allocated essentially to the auto company. It was just extraordinary how much technology.
It's sort of a question that I have, which is how much money do the big auto manufacturers have to invest in the cutting edge technology at a time when their sales are plateauing? And we've seen sort of, we've already seen peak auto sales in our rear view mirrors. A lot of people are saying, how much does this crimp their ability to invest at a time of fundamental transformation of the auto industry?
Yeah, exactly right. And when you take a look at the auto companies, what do we hear about a lot is some of the new labor contracts that they're forced to negotiate. So the cost pressures, are on the capital side, as you suggested, for all the technology as well as the operating side in terms of the labor costs. But I'm looking at some of the FA function for Ford and GM. They're putting up some big profits these years.
Yeah, so they've got the money to spend if they would so choose. Interestingly, though, to talk about this and some of the innovation in light of what we're coming up upon, which is about 7 minutes away, which is the signing of the U.S.-China Trade Pact. And this arguably, any kind of disruption in trade agreements has a disproportionate effect on the auto sector, more so over in Europe than in the U.S. And, that's been a drag. But I have to say, how much is this due to trade and how much is the slowdown due to the fact that China itself is also slowing down? And its auto sector, we saw auto sales decline for the second time in 2 years on an annual basis. That was the first time that's ever happened in 30 years. So this is a complete shift in the global auto market.
Yeah, exactly right. And unfortunately, coming up, we have our good friend Leland Miller, CEO of the Beige China Beige Book International, who'll give us very informed thoughts on kind of what this means for China.
Should we get some informed thoughts from him?
Let's do it.
I mean, I think that might be better than me pretending to know.
Right, exactly.
I could. I'm happy to pretend to know.
Right, exactly.
Leland Miller here in studio with us. What are you looking for today?
I don't think that there's a chance of a breakdown. I think that we're, the deal is pretty much spelled out. It's a purchase agreement. Not many people are expecting big things on IP or other issues. So, look, I think you're looking for a lot of CEOs clinking champagne glasses and saying, we're going to be friends for the next year.
All right, but are you skeptical that this is a material deal? Or, is there really meat here? How are you kind of viewing this?
The meat is the purchases. Beyond what the Chinese have provided, are talking about buying, no, there really isn't a core deal. The Chinese are putting in certain IP measures. Some of them they have announced previously, 6 months ago or longer. So look, the reason there's not a bigger deal is that the two sides just decided that they couldn't come to terms with either rolling back a ton of tariffs in order to get the big IP forced tech stuff, and so they said, look, the best way to do it is to go right on in and just do buys.
One of the big questions has been sort of the overlap between the WTO agreement, the fact that the U.S., the UK, or rather the U.S., the EU and Japan have all teamed up to try to pressure China to reduce their industrial subsidies at the same time that we're signing this Phase 1 agreement. How are these multilateral and bilateral tracks overlapping or not?
Well, I think that the administration realized recently that it's better to have friends. And so at the beginning, everything was bilateral. We're going to get a bilateral trade deal. We're going to get bilateral agreement from the Chinese not to do this or to do that. And they've come around to the idea that it's an easier process if you get the rest of the world on board.
Is that